overview, if we can get it, that will help the guys to get off and
believe it or not, that is exactly, yeah. So if you do talk to Deepak or anybody else, make sure if they have not attended this class, this is exactly what we're going to go over. I just realized we did one in July, so we're probably a couple of weeks behind on this. And we've been focusing on that real estate marketing bootcamp so much that I haven't had a chance to do this class, but we try to do this class once a month, as much as we can. So what you're talking about, Srini, is exactly what we're going to talk about on this class. So that's good.
Okay, thank you.
All right. So you guys ready? All right. So let me go ahead and start sharing my screen. And I'm going to go ahead and send out one more quick notice in case we get anybody else that's joining.
So Ketan, while you're doing that, I'll just ask my request or ask is, I think in the layman's terms, if, I have a potential buyer as a client, what is the thought process that goes in? Here's what you do. Here's what you do. And I don't know if that's what you're going to cover at a very high level. That's what was me as well. So.
Yep. All right. So, and Raj, that's actually a good question. That's actually one of the training sessions that we did just a few months ago. It's actually part of the real estate marketing bootcamp. It's that, 10, 12 week session that we do. It's called the First Client Communications. So let me put it on.
So okay. And I don't know if you saw my email from yesterday. I did actually sent you that email saying, hey, that video is no longer available.
Yeah, no. And I think what's happening is because can you guys hear me? Can you guys hear me?
You are actually breaking up in the middle.
No, we can hear you, Ketan. We're good.
You guys are good?
Yeah.
Maybe it's on my side.
Okay, then I'm not going to switch my network because I know we have issues with my network here. From time to time, it'll just start going really slow. If it does do that, just text me and I'll switch over to my hotspot. Okay. So for now, I'm going to leave it alone. But if you start seeing that I'm not talking or whatever, just let me know and I'll switch it over. I'll switch over to the hotspot.
Okay.
All right. So Raj, so one of the things, what I'm going to do is before we finish the class, just remind me, I'm going to actually go in and I'm going to see if I can find that First Client Communications video. I'll do it online when we're all on the call. Look it up. And then I'm going to actually move that one over to YouTube as well. So that way it's good to go. So, and if you know me, I'm one of those, I'd rather get things done right away. So that way I don't put it off. So we'll do that as well. So just remind me that one and moving this one over right after the call. Okay. So we'll do that one together and then I'll move this one over later on. All right, let me get started. Let me get started here. Hang on. All right. Can you guys see my screen?
Not yet. Not.
Okay, good. All right. So this is called the New Agent Orientation. It is maybe a 2 hour training course, 2 to 3 hours. I shouldn't say 2 hours exactly. It's a 2 to 3 hour training course and really goes over a lot of what you guys have already learned in not only in your initial 6 classes that you took in real estate when you got your license, but it will go over really what I call the next steps. Meaning, now that you got your license, what do you do, right? How do you get started? And one of the reasons we did this was because, a lot of different reasons, but the main thing is I wanted to make sure that you guys were into, understood the process completely. Yeah, and that was the most important thing. So let's go ahead and get started. All right, so here's 2 ways of doing this. Have your laptops ready. You can tag along. We're going to put this video on YouTube. We're going to put this record session on our YouTube channel. All right, and one of the first questions I always ask, and this is going to be to all of you guys. All right, and you guys should remember this from your training, from your classes that you took. Hopefully this would be from the contracts class. So I'm going to go ahead and ask you guys, and just feel comfortable to just unmute yourself and you can answer the question. So the first question is, what are the ways to get out of a contract by a buyer, and what are the ways that a seller can get out of the contract? So let's go ahead and just kind of briefly talk about that. So I'm going to start off and let's see, I'm going to just go down the line. So Srini, you're the first one on my video here. So I'm going to open it up to you and tell me one way a buyer can get out of a contract.
So one thing can you hear me okay?
Mm-hmm.
Okay. So one thing I'm using is that third part, like the addendum for like if suppose if the appraisal comes lower than the price, then we have an option to get out of the contract.
Good. So you actually talked about two different ways of getting out of the contract. Not sure if you realize that. You talked about the third-party financing, and then you talked about the appraisal.
Yeah,
Both
right.
are two different things, right? So now I'm going to go to, so Raj Loda, if you can hear me and if you can unmute. So now let's go and expand on that. So Srini talked about third-party financing, and I'll go back to the appraisal one again. So tell me more about the third-party financing. Where in third-party financing does your buyer have an opt-out?
Right. So there are, let me go step by step there. Right. So in our contract, we put option period and we give option money. Right.
So you can talk about the option period and then I'll go back to the others. Go ahead.
Yeah. So we, in the option period, we do the inspection, right? We find out if there are any major expenses in the, in fixing the property, right? And the buyer has an option to back out in that period. Now, once the option period is passed, right, the mortgage processing starts.
So, I'm going to stop you there real quick. So Rajendra, I'm going to stop you right. Okay, so now let's take that option period stuff. So now we're talking about three different ways. But so on the option period, what is required for the buyers to have the opt-out? So there's two things that have to happen. So tell me what those things are.
Two things required to opt out.
Yes, yeah. Because if you don't, it's performance, right? If you don't perform by doing this, you don't have the right to do this. Does that make sense? So what am I looking for?
So we first have to do the inspection, right?
No, not talking about inspections or anything like that. I'm talking about the actual performance within the contract. What is it that you have to do in order to achieve your option period ability? Does that make sense?
In the contract, we have to give number of option period days, and we have to pay the option money.
Okay,
right?
So yeah, perfect. Yep. So option period, option money. When does it have to be paid by?
So option money has to be. So just imagine today the contract got executed, right? So today is day 0 of the contract. So before the third day ends, the option money has to be paid.
Correct. Exactly. And that's what I'm looking for. It is the third day. And when you are talking to your clients, make sure they understand that the minute the contract gets executed, they are on the hook for that $200, $500, or $1,000. Okay.
Correct.
They can't simply say, "Oh, just write the contract up and then I'll pay you the option money, or I'll pay you the earnest money." Both option and earnest are required for them to get out of the contract. We've had not necessarily a lot of issues like this, but it comes from time to time where, the buyer says, "Oh, wait a minute, I did not understand this." So it's on us as real estate agents, the licensees, to make sure that your clients understand exactly what that option period means, and the fact that you have to deliver that option money, even if they decide, they have cold feet the next day. That's not good enough. Does that make sense? They are on that hook for $500 or $1,000. Does that make sense? Or even $2,000. Okay,
right.
So you guys have to make sure your clients understand that this is not an option of just, "Oh, let me just get out of the contract and I won't pay anything." One of the things you got to look at is my contract offer email. All right, I'm going to put it in the chat, but get a chance to look at that. And you'll see what I'm talking about, because it goes over some details that you need in order to explain to your clients. All right. So let's go back. So option money has to be delivered. Now, keep in mind, the old days, the option money was delivered to the sellers or the listing agent, right? And it had to be done within 3 days. Now, the new way is the option money and the earnest money are now delivered directly to the title company. All right. So just remember that.
Yeah.
Delivered to so the second piece of this is you had X number of days. And I'm gonna ask a specific question, Raj. What's the timeline as far as what time on that last day, on or before that last day, do they have to deliver if they decide not to move forward or terminate on the contract? What is that time I'm looking for? It's a simple time.
5 p.m. in the evening.
Very good. So just remember that. And this is for all of you guys. 5 p.m. is that number that's the magic time that you have to understand, that if your buyer is terminating a contract, you have to send out the notice of termination, check box number 1, and make sure you get your buyer signature, and then make sure it's delivered at least at a minimum to the listing agent before 5 p.m. And what I would do is, in this case, go ahead and deliver it to the title company as well. All right, so good. Let's go down the line. So Prithvi, Raj, I'm going to ask you. So if you want to unmute. Okay.
Yeah.
So the question now to you is, let's go back to that third. And I'm only going to discuss 3 or 4 of these ways buyers can get out of the contract, because we got a lot to cover. Going back to that third-party financing, it's, if you know where it is, you can tell me, or if you know the main clause that I'm referring to, tell me what it says.
I just had it open.
Yeah, no worries.
So are you asking the third-party financing addendum, or?
Yep.
Yeah, so it's on number 22.
No. So it's going to be the third-party financing addendum. I don't know if it's
And also and the other one is where the number 3 sales price is as well.
Yeah. So no. So yeah. So that's the financing portion of it. So third-party, and I'll go over this. So this might be just, I know you're new. So let's go through. So the third-party financing it's an additional addendum, and on the first page of the addendum, on the bottom of that first page, it's what we call the financing approval or credit approval, right? Which means that X number of days buyer has to get financing approval. And basically what
I see what you mean. Okay.
Yep. Yeah. So it's on if you guys get a chance, look at the third party financing addendum. It's that addendum. It's a 2-page document. On the bottom of it, you have this clause that basically says that within, and obviously here's the important thing. Nowadays, it used to be 21 days, 18 days, whatever. Now, a lot of the sellers, listing agents, are looking for 12 and 14 days. Okay. So you've got to make sure your buyers are getting the financing done as soon as possible, and make sure you understand those timelines. So let's say on that third-party financing addendum, you've put down 2 weeks, 14 days. That means that your clients, your buyers, have to be able to obtain credit approval. That's all it means. Credit approval is a couple of things. It's making sure their credit, or their credit scores qualify them for the loan. Make sure that the debt to income ratios, meaning the lender has checked their W-2s, 1099s, whatever income that they have to show, is enough to qualify for the what is it called? The 45% debt to income ratios, or whatever they call it, right? So they're going to look at that. They're going to, when they pull their credit reports, they're going to look at their debt. They're going to see what their revolving debt is. Their revolving debt is going to be car loans, mortgages, other mortgages. It's going to be things like that. And then they're going to make sure that, if your buyer is offering $500,000 and he is putting $100,000 down, which is 20%, make sure that in the bank statements, I see at least 100, maybe 120, 150,000, just in case, because now we're going into that appraisal addendum, which says that, if you're having the appraisal addendum waived, that just means that your buyer is willing to pay the delta between the offering price and the loan, the appraisal value, right? So another one that you got to remember, if you don't have your buyers sign or acknowledge the appraisal addendum in any way, then what happens is that the third-party financing, page 2, which is referring to the property condition, applies. Okay, it's a little confusing right now. We'll go over it in a little bit, but just remember that. Here's the simple way of explaining it. If you have the appraisal addendum that's part of the contract and your buyers are signing it, they're willing to pay the delta between the sales price or the contract price and the appraisal value. Let's say, for example, the sales price is 550,000 and the appraisal only comes in at 510,000. So the delta between the two is 40,000, along with their 100,000 in down payment. So they need 150,000 that they need to cover, right? So that's kind of what we're saying. Just kind of remember that. Now, keep in mind, if they don't have the appraisal addendum, then the third-party financing, the clause on page 2 related to the property condition applies, meaning that if the appraisal does not come in at value, then your buyers have the right to terminate or to renegotiate the contract. And keep in mind, the seller is not obligated to do the same, meaning, let's say you don't have the appraisal addendum and the value comes in at 510, your buyers offered 525, so the difference is 15,000. And let's say the sellers have another offer that's cash, that's 550. They may not decide that, you know what, I'd rather take the risk of losing these 2 weeks that we had, and I'm just going to go and get the cash offer that came in after yours. So make sure your buyers understand those logistics. Now, keep in mind, your buyer is able to get out of the contract. Potentially, the earnest money will be refunded. But at the same time, you know, there's no obligation on the seller side to accept whatever that renegotiation is. All right. I know I've talked a lot about this. So kind of wanted to just kind of give you guys some of these. There's a few classes out there related to ways for a buyer to get out of a contract. Apparently there's 38 ways to get out of the contract. I'm familiar with 17 of them pretty well. So here's what I want you to remember. There are between 17 and 35 ways to get out of a contract. Okay, so just remember that more than anything else. Okay, so and the second part of this is, why is this important to you? Right, you don't need it today, but here's the thing you got to understand is that there will come a time, and our goal is always to protect your client's assets, meaning our goal ultimately is to make sure that, you know, we protect their earnest money, right? That's the most important thing. And so the reason you have to understand these, and the reason you have to, because, you know, you're going to have a buyer that may not qualify, but what if that financing period is over and the lender doesn't tell you about that? So this is an important factor that you guys have to understand, is you have to be aware of each and every timeline that is associated with the contract. What I used to do is I used to create a spreadsheet, and each contract that I had was one spreadsheet. And I would plug in the dates. Like, for example, the option period, 7 days. I know what the effective contract date is. So then I add 7 days to that, knowing that, hey, I have to, within 5 o'clock on that 7th day, I have to know exactly what my buyer is wanting to do. If I didn't have the seller's disclosure, I have 7 days, or I think it's 5 days, sorry, 5 days to deliver that, to acknowledge the receipt. And if the buyer decides that there's something in that seller's disclosure he's not happy with, he can get out of the contract. Financing period, if I have 12 days, just make sure you know that that is 12 days or 14 days or whatever it is. And don't assume, talk to the lender, ask him, hey, how's the loan coming along? We need to let the sellers know. I need to know, if my buyer's moving forward or not. Same thing with the appraisal. Make sure if you have an appraisal waiver or a partial waiver or any of the timed appraisal waiver clauses, make sure you're aware of those, right? So one of the most important things that I tell realtors, and especially in our team, is communicate, and understand your timelines. That is extremely important. I am going to ask, let's see, who am I going to ask this to? You know what? I know Alpa knows this. Sanjay probably knows this. And maybe a couple of you guys knows this as well. So I'm going to ask, let's see, Dev, I'm going to ask you, what is the one way a seller can get out of a contract?
If buyer cannot get his financial approval.
Yeah.
Okay.
But that's not the way the seller. So remember, contracts in Texas are considered unilateral, meaning they're unilateral to the buyer, meaning the obligations are on the buyer side, with the exception of one clause that allows a seller to get out of a contract.
Yeah.
Do you know? And if you don't know, that's okay. Don't worry.
I forgot it. Yeah, that's fine.
All right. So does anybody else know? Does anybody know? Anybody want to speak up? Okay. So I'm not-
I'm
No,
wondering,
you know,
like,
only if buyer cannot deliver the required check money and everything
got it.
within
You
no
got
time.
it. Exactly. Very good. So that is exactly what I'm looking for. The only way a buyer can get out of the contract, the only way the seller can get out of a contract is if the buyer does not deliver the earnest money. Okay. Now, here's the thing. Sellers can renegotiate or try to renegotiate. There's certain other ways where if the title is not clean, then it delays the contract altogether. At that point, the seller may say, hey, we got a lien on the house that just we can't clear up or whatever. So there's certain other ways, but from a contractual obligation, let's put it that way. From a contractual obligation, the only way the seller can get out of a contract is if the buyer does not deliver the earnest money within 3 days. So I want you guys to look at the seller's termination, notice of termination. All right, so that's another form called seller's notice of termination. And one more question, why do you think this is important to you? Does anybody know why this would be important?
No, only if transaction completes, we get the money. Otherwise, we don't get money, right? All after is waste without both either one of the cases goes wrong.
Yeah, no, so say
Or-
that again.
or else, like, also that it's possible something changed. For example, I heard in one class that the seller put the listing and his wife got cancer and she wanted to stay in the house for a longer time. And, things like that, something might change.
Yeah.
And if you change your mind, there's no easy way to get out.
Bingo. That's what I'm looking for. And that's exactly what you're exactly correct. If you change your mind as a seller, there is not an easy way to get out of the contract. Okay. And that's what I want you guys to understand, that because when you represent sellers, you want to make sure that they know that, hey, the minute they sign this executed contract, or the minute they sign and execute this contract, they're on the hook for this unless the buyer does not commit and provide the earnest money. Now, here's the other thing, is if the buyer does not provide the earnest money, does not deliver the option check, the seller can follow all default provisions, meaning they can go after the buyer for, canceling out on the contract incorrectly, hypothetically. So there's a lot of different things you want to understand as part of this. All right. So I know we've talked a whole 30 minutes on this, I think. Yep, pretty much. All right. So let's go ahead and we're only on page 1, so we got to move forward. All right. First things first, business cards and networking. So what we mean about business cards and networking is very simple. The minute you have your first, and keep in mind, we provide you with your first set of business cards, right? So the reason we started doing that is because we didn't want to have you guys, and we had this happen, right? Some of the agents wouldn't get their business cards for 3-4 months, and that's not helping you. So we wanted to make sure we help you by providing you the first 100 set of business cards. And then in the future, if you needed those same set, now you already have, you have your logo, you have your picture, you have the whole setup to where all you got to do is just hit reorder, have it delivered to your house or whatever you wanted to do, and you're good to go. So here's what I want you guys to do if you have not already done this is, number one, business cards. I think all of you guys have business cards. If you have not ordered them, go on the back agent and set up your survey for the business cards. Number 2, email. All right. I want you guys to send out a standard email. If you have not done this already, it's part of your marketing and it's basically just an introduction. You can say, and you can do, you can use MailChimp. You can use a lot. If you have a bunch of email addresses on your Outlook address book or in your Google Gmail address book or whatever, just, reply all, or just, figure out who you want to send it to. You can send it to your first 50 close friends and relatives. It's about that circle of influence, right? And what you're wanting to do is send an email and basically just say, hey, hey, everyone, or dear friends and family, I just recently got my license. I joined this brokerage, ReKonnection LLC, and would love to get some practice and at the same time help you in any way I can related to real estate. If you need me to run a CMA for your home just to see what it's worth, or if you want me to run some searches for you, things like that, I would be happy to help. please give me a call. Please email me. Here's my phone number. Here's my email address. And here's the website for our company. So, and I have, if I'm not mistaken, I have a couple of these sample emails. They might be on our back agent on our resource folder. So I'll go look for that. If I don't, I'll move it over there. So that's one of the things I will make sure to do. Give me 1 second. I'm going to put that as my notes. Because I know we have that email communications. It is part of the real estate marketing bootcamp. We actually had you guys do that this year, I think a couple of times, where I wanted to see exactly what you guys were sending out to your friends and family and circle of influence, right? So if you have not already done that, make sure you guys do that. You can start with 10 people. You can start with 5 people. You can blind copy all of them, so that way they don't know who they are. Or if you're comfortable with 50, go for it. Just send it out to whoever you want. The more people you send it out to, the more influence you're going to have on who contacts you, right? So here's a good example. You're going to be, 6 months down the road, you're going to be at a social gathering, right? And real estate's one of those things people love talking about. You're going to be at that social gathering, and they're going to be like, okay, I just bought my first investment property, and he happens to be your neighbor, or he happens to be your cousin. Here's the thing. They did not know you're in real estate. Otherwise, they would have reached out to you in the first place. Does that make sense? It happens all the time. I had 2 neighbors of mine just recently sell their houses. They did not know I was in real estate because I have not, and I've done that for myself. I mean, I have not, advertised the fact that I'm in the neighborhood as a realtor, and only because most of my business came as a referral anyway. But if you're starting off, that's one of the best ways to do it. All right. So just a couple of things about that. All right. Start networking day 1. We talked about that. Market yourself, business cards, email campaigns, introduce yourself at social events. Visit builders, read or browse the internet for real estate related topics. So when we send, whether it's me or Ram or Rachel, or even on, and I noticed, I think, was it Srini who sent out that earlier note about the housing market slowing down? I saw that, and I actually read the article.
Yeah, Yahoo article. Yeah, today.
Yes,
today only it came.
Yeah,
I heard
read
it.
that, yeah.
I heard it on the NPR too. Yeah.
Yeah. And if you look at one of the, I don't know if you guys are on that Austin blog, look at what I wrote a month ago, right? And what did I say? I said, the market is going to start correcting itself, right? So read through that little blog that I sent out. And I think I put it in our ReKonnection one as well. It's exactly what we just talked about, less, because people were saying, well, how much longer is this going to continue? And it's not. We know that, right? It's the law of physics. What comes up has to come down sooner or later. All right. So introduce yourself, networking, very important. Join real estate clubs, post on Facebook, update your profile on LinkedIn. A lot of us are part-time real estate agents, right? Here's the challenge with that. If you don't want your coworkers to know you're in real estate, or if you have a position with a company where you have to keep your real estate practice private, then I can completely understand, not having to promote it and so forth, right? Which is completely up to you. But if you're okay with it and there's no, conflict of interest, and you're able to post on Facebook or your LinkedIn or your LinkedIn profile or any of that stuff, then go for it, right? That's going to continue helping you as part of your future real estate endeavors, I should say. All right. So just remember those 2 things. All right. Things you should always remember as realtors: understand the contracts. And the biggest challenge for all of us is going through that 11-page document that's called the 1 to 4 family real estate contract. But you have to read it, and you have to read it often. All right. IABS should be part of your email signature or the first part of your discussion with potential customers, clients, every time. What that means is either you keep it on your email signatures or you discuss with them when you first meet them. All right. Every property on the MLS must have an associated listing agreement. That you can't list a house on the MLS without having either a listing agreement for sale or a listing agreement for lease. Sorry. Become familiar with time critical events. We talked about that just a few minutes ago. Option period, fees, earnest money, timelines, financing addendum, HOA addendum, the receipt of the survey, and seller's disclosure. So here's the one little homework that I want you guys to do is if you get a chance, the most frequently used contracts that we always use is the 1 to 4 family contract. So I want you guys to take some time and just read through it, okay? Along with that, read through the third-party financing addendum. Those are the 2 most important ones. The third most important one is the HOA addendum, because a lot of the homes that we sell today are going to have a homeowner association tied to it, all right? So that is your homework, whether it's today, tomorrow, next week, is to read through those contracts. Okay, thanks, Srini, thank you. So just, read through those contracts. It's going to be very, very important to do that. Let's see here. All right, so zip forms, local board, MLS meetings, Texas Realtors. If you have everyone should have gotten a orientation meeting, right? I mean, orientation email, or what we call welcome to ReKonnection. Here's what I need you to do for the next week or whatever, right? And in there's a couple of things you have to do, right? Number 1 is you have to join a local board. If you are a member of, or if you're in Austin area, you're going to join ABOR as your MLS. You're going to join WCR, which is called the Williamson County Realtors, as your local board there. If you're in Texas, North Texas, sorry, if you're in Dallas or Fort Worth, you're going to join CCAR as your local board if you're brand new, okay? You're going to join CCAR as your local board. You're going to join CCAR as your MLS. If you are an existing member of MetroTex, you're going to transfer your MLS over to CCAR, because the way it works is that because I am part of the CCAR MLS as a broker, all of our agents underneath have to be part of the CCAR MLS. However, you can continue keeping your MetroTex Association of Realtors local board. And the reason is because I've also gotten secondary membership at MetroTex, and I have secondary membership at WCR. At ABOR, I only have the MLS membership. The reason is because when we first, before a year ago, 2 years ago, most of our agents that were in Austin were joining the CCAR and MetroTex as their primary board, and then ABOR as their MLS. We had a couple of agents that came from Keller Williams about a year and a half ago that had already joined, or they were already members of WCR. So it just made more sense for us to move everything over to WCR as our local board over there, and then keep ABOR as our MLS. So that's one of the reasons why it's the way it is. When you join these boards, there are 2 required classes you have to take. One is your MLS training, and the second one is the new agent orientation. They will suspend your license if you do not take it within 90 days, I think. We just got a notice for one of our agents that had not taken it since last year. So make sure, it's very important. They go over NAR Code of Ethics. They go over a lot of different things. They're not going to go over what I'm going to go over, that's for sure, because this is a little bit more different. Their portion of it is more towards standards and ethics and things like that. All right, so just become familiar. And then the other thing I wanted to make sure is become familiar with the Texas Realtors website. All right, there is benefits that are available for Texas Realtors. You want to be familiar with that as well. All right, let me see if the next one is about, nope. So let me see. Yep, so we're going to go into zip forms. All right, so you guys ready for a little bit of a practice? Let's get started. I am going to, now every one of you should have access to zip forms. If you are a local board member, meaning if you are a member of WCR, HAR, which is our Houston Association of Realtors, or CCAR, you will have you'll have membership in your local board, state, and national boards, okay? Because you're a member of the Texas Association, or by way of that, you're now a member of the Texas Association of Realtors. And because of that, you also have access to what we call zip forms, all right? Zip forms is what we call our contract forms portal, okay? I have it set up on my, if you notice, I have it set up on my desktop, okay? So for me, it's desktop driven. For a lot of you, it may be website driven. So I'm going to show you what I mean by website driven, okay? Let's see here. Okay. What I mean by website driven is the first time you set up your account for zip forms, you're going to click on this blue box that says zip forms. if you have not registered on Texas Realtors, that is what you're going to do. Okay, so follow the instructions. Once you've done that, now you have what we call the web-based zip forms access. All right, then you can go ahead and download it as a desktop version or whatever you want to do, however you're comfortable with it. So just remember that you're going to go to texasrealestate.com or just type in www.texasrealtors.com, click on zip forms, and then from there you're going to access. And I think for me, it automatically, yeah. So you're just going to go into membership login and see forget your password or create account. So those are the two things you're going to do. Go through the process. You'll know how to do it. Once you're there, you're going to have access just like I do here, which is where I'm going to sign in. Okay. All right. And if you guys need to ask questions, just don't feel shy. Just go ahead and ask questions. Let me go into blank. Let's see here. If I have any sample. Okay, so let's go ahead and I think, I don't know where I put, let me see if it's on white still. Maybe sample contracts. Yep. So I'm going to go sample purchase contract. Okay. So now,
A quick question.
Yeah, go ahead.
So this sample or blank you get like automatically because I'm part of your agency, or I have to?
No, you have to create it. Yeah, okay. You're gonna have to go in here and do this exact same thing. Okay. So I'm gonna show you guys one real quickly. I'm gonna create one. Let's just do that. And I think it might be easier if we just go step by step. Okay, so this is what you're gonna see as the first, as your dashboard, your transactions and all that stuff. So here's, let's say, for example, let's say Dev has a client that's interested in 1234 Main Street in Leander, Texas, right? So the first thing we're going to do is you're going to have to create the contract, okay? And I'll go over these sample contracts in a minute. So you're going to click on transactions. This is the dashboard. These are the forms section. So just now, the great thing is they have the forms set up directly, which is great. And here's my transactions. So I'm going to go into my transactions. I know I'm going to go ahead and create a new transaction. So I'm going to click on new. Okay. You have 5 options: new listing, new purchase, lease, new lease listing, and quick sign. So I'm going to do a new purchase or offer. All right. I'm going to go ahead and type in my address, and it should come up here in a minute. Whitestone. Yep. It's Murphy. So let's see if we get Murphy in here. There you go. So it automatically comes up. Click on it. Okay. Now it's a residential contract. If it was on the MLS, you can also do an MLS Connect and pull the details off from the MLS itself. Okay. Now I have templates that I've already set up, meaning, you know, I have my purchase agreement, my residential lease, residential purchase contract 2021. And these are also the same templates we have under our get done sample contract section. So in this case, I'm going to go ahead and do a purchase, which is the 1 to 4 family. So I'm going to click on my residential purchase contract 2021. Now, keep in mind, you're not going to have this. So you're just going to move forward with click on save, and you're going to go in, and when you do this, you can create your own templates, kind of like what I've done. And I'll show you where and how to do that in a minute. Now I'm going to go into my document section. I have all of the standard documents I use for my contracts that I'm writing up. 1 to 4 family, the information about brokerage services, IABS has to be there no matter what. Even if you've made them sign it again. 1 to 4 family, third-party financing addendum for the HOAs, seller's temporary residential lease, because so often nowadays the sellers are asking for a lease back. So that's why I have the seller's temporary residential lease as part of my template. Okay, this is again my template that I have. You can decide whichever forms you need on your template. And then of course the addendum concerning the right to terminate due to a lender's appraisal. So I have 1, 2, 3, 4, 5, 6. I don't use the wide fraud warning. That's I don't even know why it's there, but so the 5 that I use are the ones that we just talked about. All right, so now I'm gonna, you know exactly what the IABS shows. Okay, again, ReKonnection, and you can use this template. I'm gonna go into my sample contracts here in a minute, and I'm gonna show you guys what I'm talking about. Now, the only change you're gonna make is here, you're gonna change it to your name, your license, your email address, and your phone number. All right, so just remember that. That's the one change you need to make. Designated broker, licensed supervisor is the same thing. So we should be good there. I'm going to switch over real quick to my Dropbox, and I'm going to show you where these contracts are.
Hey, Ketan, I had a quick question.
Sure, go ahead.
So the IABS, and correct me if I'm wrong, but does the buyer need to sign it? Send it to us?
Yeah. So ideally, so here's the most important thing. If they're not willing to sign it, and the way you want to explain this, Raj, is just say, hey, this is something that's required by the track, our commission.
Okay.
We have to, at a minimum, either provide this and let you know that it's there, or ideally, you just have to sign it. It doesn't, and let them know it's not an obligation in any way.
Okay.
It's just informational purposes. And if you remember to let them know it is informational purposes,
Yeah.
That's what it is. It's information about brokerage services, right? So
Agreed. And that's exactly what I had conveyed, is saying, hey, this is for your reference required by law. I'm sending this to you, but I never really asked for a signature. And I just want to ask that to you. It's not a requirement. It's FYI, if you will.
it's a requirement in the sense they have to have been delivered.
Correct. Not signing part, I meant.
Signing is not necessarily a requirement, but you have to be able to prove that you've delivered it. Does that
I
make
got
sense?
you. I got you. Okay.
Yeah.
Thank you.
Yeah, so that's the only thing. Yeah, you just got to be able to prove that you've delivered.
I got
because
you, I
if
got
they
you.
say, hey, I never received this, then you're going to have to kind of say, okay, well, I did send it to you, and here's where I sent it to you.
I understood. Thank you.
All right, good. All right, so let's see here. I'm going into my Can-Am Road to Group. Where is my, let me see if I have it in here somewhere. Okay, here it is. So, and remember, you can actually pull, I'm actually in my hard drive, or my drive, yeah, basically. But you can pull this same information, because this folder right here that I'm going over is actually what's available in our back agent, okay? So just remember that. So Reconnection sample contracts and templates, I'm gonna go in here. And if you notice, we have a contract write-up, lease listing, residential purchase, standard listing, unimproved. And as I go through, I'm gonna put more and more of these out there. Just so you know, the other ones are already here, and they are in the Get Done Sample Contract templates. And if you notice, all of the templates are here. We're talking about the, and the way I do it, if you notice, if I've updated it, I will tell you I've updated it, like 2021, Farm and Ranch, archived, commercial sale, buyer rep, lease listing, all of them are here, and they are in agent resources, Get Done Sample Contracts. I'll show you guys when we go into back agent where you can find this. Okay, so extremely important that you guys kind of just navigate through this so you know exactly where they are. The reason is we have this new one called Reconnection is because a lot of it is under Reconnection, to where I'm moving as slowly as you can tell as I go through it. I'll start moving some as I go, right? Let's go to the residential purchase contract, which is the 1 to 4. And if you notice, I have all 6 of those same documents we just went over here are in here. So 1 to 4, the right to terminate due to lender's appraisal, HOA, IABS, seller's temporary lease, and third-party financing. We're going to go over, and I'm going to click on the IABS. And remember, all I did was I took these from zip forms, PDF, saved it, and that's it. All right. If you notice here, this is, so I'm going to go ahead, and if you guys are good with it, yeah, I'm going to go over it, and let me know if you want me to just go over it on back agent. Back agent. If you want me to just do it on zip forms, I'll do that. So, okay. So this is the exact same thing as this. All right. So you guys know. All right. Seller 1, pull that information from your tax record. So if you're on the MLS, you're going to pull this information directly from tax. Let me show you what I'm talking about. All right. So,
Ketan,
yeah.
there is a very good shortcut for that, actually.
All right. Let's create the shortcut. Yeah.
Yeah, so when you create the template, right? When you create a new transaction from the template, and you connect, use the MLS Connect and give the MLS ID, it populates you all the data regarding the seller, the property details, the address, block number, yada yada yada, and it becomes really handy. You don't have to. It will be much easier. The seller's information and everything.
Actually, the seller's information will not be on the MLS Connect. or unless, if
Oh,
there's a way
it-
that you know how to do it, because I did not realize that. I know what you're talking about as far as the MLS Connect, right? So I'm going to show you guys real quickly, and I'm glad you brought that up, Raj. It's a very good point.
Yeah.
So let's
So
do one together.
yeah, pick up any current active listing.
Okay, let's do that. I'm
put
gonna actually take one of mine, which is 6564 Simon. And if you guys have any, especially for the Dallas folks, this is a great property. It's in Richwoods. We just put it on the market yesterday. It's 795, but it's got a pool and it's a single story. It's a phenomenal property. So I'm going to go ahead and pull this up. Okay. So
Correct.
Raj, you have to show me here, and I'll show you what Raj is talking about. So
Yeah.
and remember, you have to have your setup correctly. So I got mine, and then I'm going to just tag in the
Yeah.
address. I'm going to click on include property, and I'm going to include find. It's going to show
Yeah.
up, and I'm going to click on import. Okay.
Correct.
So I've imported it, and it says, do you want to replace? Oh, I don't want to do that. Hang on, because I don't want to replace my my template. Hang on one second. Let's fix this.
No, so go for a new template.
Yeah, that's
just
what I'm gonna do. Yeah.
yeah.
Let me go back in. Let's just go ahead and do that on here. Let's see here. Are you guys okay with us going back and forth and all this? Hopefully you guys are still getting.
We love it, Ketan, we love it.
Good. All right,
So
good.
this is
So let's go
an
ahead.
easier way of doing it, because
Yeah.
if you kind of copy paste everything, I mean, getting the title information, everything just comes up quite easily,
Yep.
You
Is
don't
it
have to
Simon?
copy paste
No.
too many things.
Should come up. Where is it? There we go. Simon Avenue. Okay, so I'm going to show you what Raj is talking about, and that's actually a very good point. So let's go through that.
No,
so in this case,
So
yeah, I'm
first
still
do
gonna use my
MLS Connect.
Yeah, I can. So you can do it either way. So I'm going to show you.
All right,
one way
right.
that-
Go ahead.
Yeah,
Go ahead, go
yeah,
ahead.
I'm going to show you guys. I can click on MLS Connect here, but I wanted to make sure I got my template set up for everything else. Does that make sense? Because
Yep.
remember, the MLS Connect is only going to provide certain details that are associated with the address, seller, all that stuff. But I have a lot of other details that I want to transfer over into the contract. So I'm going to click on save. Oh, you know what? I have 6564 already out there. That's fine. All right. So now I'm going to go into MLS.
So
Connect.
if you see here, one second.
Yeah.
Okay, go give the MLS ID. Okay.
Yep. So I'm going to show you guys real quick here. All right. So now I'm going to import this, and that's fine. I have, so now it says, do you want to replace existing data with imported data? And I'm going to click on yes. Okay.
Correct.
So what it does is it's going to put in all of this information that you see here. As far as the seller's initial details. Okay. So it's
So the only thing you got to change is go all the way down.
Uh-huh.
Go all the way down.
Yep. Okay.
See the commission, right? Net commission
Yeah.
dollars that you have to take it off. $452,000. I don't know how that there is a bug there actually.
Okay. Interesting. Okay.
Yeah.
So, yep. All right. So here's the only thing though. This doesn't give me the seller information. Does that make sense?
Oh yeah, it does not give the seller information. That's one thing I realized that that does not come up, and we have to do it manually. Now, if you go to the second tab, parties, right? If you go to the parties,
you can fill it out. Yeah.
yeah.
And
See
you
here,
can
it
fill
will
out.
give you. See, it will give you listing agents details, seller one, seller two. I don't know why. Usually it comes up actually.
Yeah, it will. I'll show you where it does. Okay. So now
Okay.
what I'm going to do is I have so now what Roger said is we've used the listing information. This is as if I'm actually, let's say I'm a buyer's rep and I'm submitting an offer on my 6564. So I'm going to click on the residential 1 to 4 family. So now if you notice, lot 4, block 9, Richwood phase 4, all of this got populated. But if you notice, the seller's information did not get populated. So here's what I want you guys to do is when you're in here, click on your TX on your MLS. And what I do is I'll show you what I do. I just go in, and what's interesting in this case, so typically the owner name is last name first, first name second. In this case, Srinivas Gurupu is the actual name. So we're going to go ahead and fill that out. So I'm going to just copy and paste this back into my transaction here. All right. So I've done that. And interestingly, there's only one seller, even though it's a husband and wife. when they pull the deed, when the title company pulls the deed, they're going to see if there's any liens against the house. They're going to see if there's a husband and wife or a spouse associated with the original deed. They're going to see if there's any tax liens against the house, and basically anything that's associated with the title to the property. Okay, so now I've added that information. If you notice, buyer's full name, put that in here. I'm not going to put in a second number, and this one's already populated, but one thing you want to do is make sure that information is correct. It comes from the MLS. It comes from your CCA. I mean, ColinCAD.org.
Sorry to interject.
Go ahead.
So if you go back to zip forms, right? Go back to the zip forms,
Yep, I'm
right?
here. Yep.
Go back to the go back.
Sure.
Save this.
Yep.
Go back.
Yep. I can click on Yep.
So once you go back, right, go to the parties tab.
Yeah. Okay. So
Yeah.
yeah.
So all the sellers and buyers information, if you give here,
Mhm.
it will get replicated in all different forms that whatever are there. You don't have to
Correct.
manually
Yeah.
type.
Yeah. So there's two ways of doing it. What Raj is saying is you can fill this out first and do it, or you can just fill it out. You notice how in our parties tab now, the information is now automatically transposed into the system. Okay. So it already did it. Like the listing agent information, I didn't fill it out. That actually came from the MLS, and I'll show you how that came through. So what he's saying is you can actually do this first, or what I prefer, and everybody's going to have different ways. As you go through zip forms, you're going to have different ways of doing this. I do it a little bit differently. I actually fill it out directly from the system, and I apply it right here. All right. So all of this stuff is information. Now, keep in mind, list exclusions from the MLS. This is a portion of the template that I have. So you're going to clean this up by deleting it. You're going to go into the MLS and look for anything on the exclusion side. And if you notice, I don't have any exclusions on here, which means you're going to put down, if you can, just click on none. All right. Now, let's say it's listed for $795. We're going to offer $200,000 on the financing. I mean, on the cash down. We're going to offer $550 on the loan amount. The system automatically calculates for you and says, okay, you're going to do 200 finance, 550. So the total sales price is 750. You're going to fill this out, whether it's a residential lease, fixture, or natural resource leases. Now, if you notice, Chicago Title, I already have it as Chicago Title, but if you go all the way up, it tells you which title company to use. You can click on that, and that comes from right here, okay? It comes from Stewart Title, the address, and everything else. So I already have it pre-populated. Here, you're earned, so this is the address. So now, the one thing you are gonna have to do is just take the address and pull it up from the MLS, which I do this way, a lot easier, and then just copy and paste. So I have that, and I have the phone number. So that way, whoever's making the offer, they know exactly who the title company is, who their where their address is, and the earnest money is going to be changed to what would be a good amount? 10,000 maybe? Oh, not 100,000. Let's change that to 10,000.
Hey, Ketan.
10,000. Yes, go ahead.
One quick question I had is, this is all new, right? In a way. So in regards to the title company, I saw you have somebody picked already because you're the seller's agent, right? So if I'm a buyer's agent, should I just accept what you have there to use, or how does that work actually?
Yeah. So in a seller's market, absolutely, I would say yes. Not absolutely, but try to do it, because remember, they do have the upper hand in a seller's market. And
Okay.
here's the other thing: if the seller is paying for the title policy, yeah, it makes sense. But in in a buyer's market, you have a little bit of a choice where you can pick and choose the title companies. A couple of things you want to remember, and this is important to know. One is title companies are a neutral party in Texas, right? So
Okay.
in other words, they're not going to do anything differently for you as opposed to somebody else. Number two, title policies are their rates are governed by the Insurance Board of Texas, meaning that whatever the policy rates are at the moment or at the time, it's the same across the board, right? So when the seller pays for a title policy, like for example, on this $800,000 house, the title policy may be about $5,000. So, that's going to be whether I use Chicago Title, Stewart Title, or Republic Title, or anybody else. the best way to do this is you're building a relationship with the title company. Okay. So in other words, when you start working with 1, 2, 3, 4, 5 title companies, you'll get a feel for which one you're more comfortable to work with. And that's ultimately what you're going to decide on. So when you have your listing, you're working with them. But in the meantime, just to make the best way to explain this, just to make the transaction go a little bit smoother, you can decide to use the seller's suggested title company. You don't absolutely have to, but that would be probably the wisest choice at that point.
Okay.
Make sense?
Sounds good. Thanks.
Yeah. Yep. So you notice here, I have the standard at $500 on, and I just recently changed the contracts. I used to have, does anybody remember what I used to have? It was 150, believe it or not. 6 months ago, before I changed this contract, before I revised the new version, I had it as $150 for the option, or maybe 300 at the most. But now, believe it or not, I've already changed it to 500. And in a case like this, I would bump it up to 750, maybe. But this is what we talked about earlier. Make sure your buyers understand what this clause means. Now, on here, I have 4 days as option. You'll see, if you get announcements from a seller's agent saying, hey, we just accepted an offer, thank you for your offer. I'll just tell you kind of where we were on it, and you'll see there's no option. It might be, a 2-day option for $1,000 or $1,500. So it's all about that negotiation. I have it standard right now on my contract, and I believe that's the same thing that's here. And obviously, I want you guys to go through this contract. See, list any exclusions, confirm from MLS descriptions. I have it, see here again. So I still have it as $300 and 3 days on the option, but that's all negotiable. On our contract, we did the one we're working on right now, $750 and $400. Okay. I'm going to change this to Stewart Title because that is the title company we're using. So let's fix that up. And I have it right now as seller's expense. But if you're working with a buyer that has already told you, hey, I do not want to lose this house no matter what, at that point, you kind of have to talk to them and say, hey, do you want me to switch out the cost of the title policy over to your side? Okay. So again, it's a negotiation. You just have to decide what makes most sense for you. All right. I'm going to go ahead and change this one over to buyer's expense, meaning that my buyer is going to cover the cost of the title policy. In this case, will be amended. So we talked about shortages, or no, we didn't talk about it, but I know somebody had asked a question about it. Let's do this. Are you?
Yeah, I only asked Ketan. So I was wondering, what is the shortages? Like, it's basically that maybe something, the title survey or something comes back and say, oh, this is the smaller.
Yep. Hang on one second. I'm gonna record. Hang on one second. Sorry, I was just typing. ReConnect is there's a cost. Okay. Just a quick. I'm just gonna. Sorry, Srini, one second. Okay. So let's talk about the shortages in area. All right. Let's say, for example, you have a, so really what this means is when it protects your buyers going forward. It's basically an additional insurance policy on the fence. As an example, the boundary around your home. Let's say you are in a community that is 25 years old. You have a half an acre. Your neighbor has a half an acre. Everybody around you has a half an acre. And you have not done a survey. The previous owners had not done a survey. Now, all of a sudden you do a survey, or you might have an existing survey from years ago, right? You use that. Now, let's say, for example, your neighbor decides to sell their home. They do a survey, and all of a sudden they find out that your fence line on their boundary is 1 or 2 feet into their property line. All right. So now, by having this additional endorsement called shortages in area, what it means is it's now protecting your buyers from the cost of putting that fence from 1 or 2 feet into the seller's or the neighbor's boundary back over to you. If we're talking, let's say, for example, a half an acre as an example, right? and let's say you have trees that are on that side. Now we're talking about maybe $15,000, $20,000, $25,000 in cost. So this additional endorsement basically covers that portion of it. Okay, does that make sense? The cost of this additional endorsement is what we're talking about here. It says exceptions to descriptions, conflict, shortages in area, or boundary lines. Encroachments being, a right of way or something like that, right? So will be amended to read shortages in area at the expense of that additional endorsement. What we're talking about, the insurance endorsement, is 5% of a title policy, meaning that if your total cost of a title policy was $2,500, the additional endorsement is going to cost your buyers $125. Does that make sense, Srini? All right, did I
So
go over
sorry.
that too fast?
Yeah, a little bit. So what was that? I was writing down also, but
No worries.
what is
All right,
what
so-
is the amount you said? 125 for what?
It's 5% of the cost of the title policy. Okay, so
Okay.
yeah. So let's say you have a $400,000 house. Let's say it's a $500,000 house that you're selling, okay, or you're buying. Let's say it's a $500,000 house that your clients are buying. Now $500,000. So the title policy is going to be 0.8 of 1%. That's, I just average it out, which is about $4,000. Okay, so the cost of the title policy is going to be $4,000, and this additional endorsement or this additional insurance policy is going to cost me
$200.
$200, right? But what does it do though? It's okay. It's an insurance policy that says, hey, I'm protecting, my buyers in the future in case of there's a dispute on the boundary lines. How often do you think that happens?
Very
How
rare.
often? Very rare, exactly. So again, it's a conversation with the buyers saying, hey, do you want this additional endorsement policy, or are you comfortable with the fact? Here is where the rarity really exemplifies itself. If you're in a subdivision, rarely will there be any disputes in shortages in the area, unless the surveyor really just screwed up, right? Because if you're in a subdivision, think about the new homes that are being built. You're building on a lot. That lot line, that fence line is surveyed out. You're going to get a brand new survey with that lot line, right? So, but if we're talking about a home that's 30 years old, or if we're talking about acreage that's 2 to 3 acres or 4 acres, and you have an iron fence that's the boundary of that on the one side, just the example I gave you, it may not be an issue at this moment, but you're protecting your buyers for future disputes potentially. And it's like every other insurance policy out there. What's the risk of not having it? Okay. Does that make sense?
Okay.
It does. I had a quick question on that. So essentially, this $125 as an example that you calculated will be paid as part of the closing cost.
Correct. Yep. It is part of the closing cost. And it
And same goes for the title policy, Ketan? The 5. Okay. Thanks. That's all.
Yep. It's a one-time payment. Yep. Exactly. All right. So that's the only reason why that's there, the way it is.
Okay, then
right?
I have a question about title policy. I know we make a payment for while closing it for title company. For title policy, right? Do you pay payment for policy or insurance? Do you pay one time, or is there?
Yes.
Okay.
One time payment. Yep. It's only at closing. However, when you go sell it, you're going to pay it again. Okay.
Okay.
Yeah, it's I don't want to get into the politics of the title policy because it's probably not a conversation we want to have right now. I have my opinions. Let's put it that way. All right, so let's go through the next one. Survey. 7 days after the effective date of the contract, seller shall furnish a survey. So 2 things when you're representing a buyer, make sure you always ask for a survey and a seller's disclosure. Okay. Now, all this means is that the seller is going to provide an existing survey within X number of days, within 7 days. Here is the important piece to this, okay? If you're representing a seller and you have the listing agreement already ready to go and everything else, and one of the most important questions you will ask your sellers is, do you have a survey? Okay. If he has a survey, he's going to have to fill out the T47, which is exactly what this is talking about here. And he's going to make sure and explain that nothing has been changed in the boundaries or on, he hasn't gotten a new fence. He hasn't added a pool. Porches are, you can draw in a porch and that's fine. But so those are the important pieces to this. However, here's the important piece. If your seller does not have a survey, when you get that contract, make sure that section 2 is marked, saying that a buyer will get a new survey. Here's the reason why. If for any reason, the standard will be this: a lot of buyers will have section number 1 marked, and they'll have 3 days within 3 days after the effective date, seller to provide the survey. Otherwise, it's at the buyer's expense only if, here's the important piece, only if you provided a survey on behalf of your sellers and that survey was not acceptable by the lender or the title company. Okay, you've done your obligation according to section 1. The difference is that if you don't know and the buyer marks section 1, 3 days, if you don't provide a survey at all, this automatically says that the seller will then pay for a survey. Doesn't say it, but that's what it happens. Okay, so actually it does. Sorry, look at the bold, what it says. If seller fails to furnish the existing survey or affidavit within the time period prescribed, buyer shall obtain a new survey at seller's expense. Okay, so remember that when you are representing a seller. Very important, guys. If you're representing a buyer, this is this is the best approach, is just follow the contract that I have on here, the sample contract, and just use that. And of course, objections within 5 days. You don't have to put in here anything other than, here's very important. If your client is purchasing this property as a rental property or as an investment, make sure rental or investment purposes. Okay. The reason is because it's a long conversation. We're gonna take a break here in a minute, but let me just kind of go through this real quick. If your buyers are getting a loan, and here's another thing, and I'm going off base here for a little bit, but when your buyers are going for a loan, make sure the buyers are telling the lender it's a rental property or investment property. If they're buying it, just be truthful about the type of loan that it is. Okay, a lot of buyers are going to want to save 0.5% or 1/4% by saying that it's a second home or if it's a primary residence, even though it's not. Number one, it's fraud. Okay, so just be aware of that. It is fraud. And number 2 is, if the minute you put that for lease sign on a HOA community that does not allow for rentals, they're going to flag it. They're going to go back to the buyers. The buyers who are now the owners of the property, say, hey, you can't put this house up for sale. For lease, right? So now they're stuck with a property that they may never be able to lease, and it's going to stay vacant. Those are certain things you want to make sure of. Being truthful is a lot easier than, moving or manipulating the system. Okay. I'm a big believer in that. And sometimes we have to advocate for that. Okay. It's very important.
Quick question.
Yeah, go ahead.
So originally the HOA or, the seller or, like the new communities, right? They're not giving for investors, but suppose, let's say a hypothetical example I say is, I buy it for my daughter. Okay. And then I will sell it, right? Let's say a year later or something. But
Yeah.
if HOA still doesn't allow it for rental, how do we communicate that? Like we have to tell them it has to be primary, or somewhere we have to.
So here's the thing, right? So in your case, if you're buying it on behalf of your daughter, you're not buying it as an investment property, because you just told me you're buying it as on behalf of your daughter, right?
Right.
So at
right.
that point, right? So then you're okay. It just depends on when she wants to move in or not move in or whatnot, right? So
No, what I'm saying is, like 1 year later, somebody want to buy it for investment property. Do we need to disclose that HOA or whatever, that it cannot be?
No. So it's on the buyer and the buyer's agent to do the due diligence. Okay.
Okay.
Yeah, absolutely. But here's the thing. here's the best advice I can give is if when they're buying it, let's say somebody comes to you and says, hey, I want to buy your house, your daughter's house, or your house, but I'm going to go ahead and rent it out. Be truthful about it. Number one, and just say, hey, if you're buying it as an investment property, it's not going to work. Okay. This HOA does not allow it, or it's already capped. Why bother?
They're gonna find it anyway, so.
Yeah, they're going to find out anyway. And it simplifies the process on your side, meaning, they're going to go through, and especially if you knew it and you didn't tell them, yeah, that's, they're going to come back to you and say, why didn't you tell me that? Right. Whether they
No,
did
I'm
the
not-
due diligence. But you understand what I'm saying, right?
Right. Sorry, I think that maybe I'm not clear enough, but I'm saying that I think we cannot, like you said, right, that trick the system that, yeah, people are not giving for investment. And because see, I'll tell you why. One example, like Lennar Homes was saying, oh, you can buy it and for your daughter, and you can give it after a few months, you can lease it out. They're just, the agent is telling me. I said, okay.
The sales rep is telling you that. Yeah. So here's the thing, right? It all depends on the guidelines of the CCNRs, the covenants and code restrictions that are part of the HOA document, right? The covenants and code restrictions, the declarations that are in the HOA document. If the HOA document already says that, now, so it may be just an inherent rule out there, that they don't want investment properties, or it may be the fact that, hey, you know what, we're gonna allow 30% investors, because things are gonna happen, right? We know that. And at that point, you might already be grandfathered in to the point where if you've lived in the house for a year or 2 years, and then you have to suddenly, relocate. At that point, yeah, you can, just go through the HOA documents, make sure you understand that. Here is one of the most important pieces to this. Knowingly is one thing, but unknowingly, meaning if you did not know or had any clue on how the loan is coming along and all that stuff, it's not your fault. Does that make sense? In other words, if the buyer never communicated with you that they are buying it as an investment property, or if they falsely told you they're buying it as a primary investment, as a primary residence, and then 6 months later turn around and ask you to lease it out. Yeah, so those are things you're not going to know about, right? So does that make sense? It's all about whether you know it or not, right? And if you know it, declare it. That's the most important thing. All right. And if your buyer is asking you, hey, can I go rent this out? Yeah. And if you know the answer, then just tell them the truth. Yeah, absolutely. The best way I can explain this is you can sleep at night better. That's it. By doing the right thing, I sleep comfortably, right? So it's just about doing the right thing. And it's doing the right thing. Here's the thing, right? Most of your buyers, when you tell them the truth and you tell them fairly and what it means, they're going to be completely okay with you, because now they know that you're on their side one way or the other because you're protecting them. Does that make sense? All right, 11:21. Are you guys okay if we take a 5-minute break? Because I think we got a long way to go.
Sounds good, thanks.
Yeah. 5-minute break, guys. 5 minute. All right, 5 minutes. I'm gonna put it on mute. right, we'll give it another minute or two, and we'll get started again.
So while people are coming in, Ketan, the option fee, and let me pull the what's the other one? Sorry,
The earnest money.
earnest money. Thank you. Is that like a in quotes requirement, or it's it is okay.
It's an absolute requirement. Make sure you
And then-
explain that to your buyers. Yeah.
Right,
Yeah.
and then is there a dollar amount specific to it, or is it just really up to you?
Ideally maybe 1% and or a
Okay.
little, yeah. So
Okay, got it.
That's kind of what the rule of thumb is.
Got it. Okay, I'm just asking more as a question. So class, it's been a while. I'm just trying to refresh my memory.
Yeah, no, makes sense. Yeah,
Okay,
absolutely. Yeah. So it's, and then of course the option money can be, if it's a $500,000 house, 350, 400, 500, whatever,
yeah,
and the lower the number of days, the better. But keep in mind, remember that just means that the buyers are going to have to do their inspections really, really fast. Okay.
okay,
All right, let's go through. Okay,
All right.
membership in a property association. That just means that whether the property is part of an HOA or not. In this case, the property is part of a HOA, mandatory. SBB management is the community association. This is for Richwoods in Frisco, right? So if you notice, it is part of an HOA. So that's the document, the additional document that you have to have with you. Now, keep in mind, I'm only going over what I'm filling out. Obviously, there is a lot more to it. So when, that little bit of homework that we were talking about, make sure you guys are reading through the contracts, okay? Obviously, a lot of this will not apply to us, statutory tax districts or Tidewaters annexation. This may, if it's provided, if it's in an area of a utility service provider, PIDs or MUDs are important to know because we do have some of those communities in both Austin and in Dallas, so just remember that, and that information is also in the MLS. If it's part of a MUD district or if it's part of a PID, that information, a lot of times you'll see it in the private remarks. So, and I'm going to go back and forth here a little bit more, but remember to read through the MLS description as a whole. What I mean by that is be familiar with the property, be familiar with the information that's provided in the property, be familiar with, everything that's there, okay? The other thing is when you're pulling up the transaction desk, in this case, I don't have it, and that's horrible because I don't have it yet, but in this case, I'm waiting on the sellers to provide me with the survey and the seller's disclosure. But when you go into transaction desk, that information should be there as well. All right. So let's go through the next piece of this. Buyer accepts the property.
Ketan,
Yeah, go ahead. Raj.
can you scroll up a little bit? Sorry, I regarding the survey, right?
Yeah.
Go up a little.
Yep.
Okay. I think you are not there yet. Regarding the, the survey and any objections, there are two that the buyer is okay with. I think it's still down.
Yeah, right here. Objections, buyer may object in writing to defects.
No,
exceptions.
not that one actually. Regarding the surveys and condition
Oh, you're talking
encroachment.
about property condition. You're talking about property condition.
No, actually, 1 second. Let me, I think 6E or something, 6E.
Title notices. 6D is the what we just talked about, which is the objections.
No, 6E, title notices. Yeah, go down. Title notices. Yeah, go down.
Okay.
Go down. Okay. No, I think let me find out. I'm sorry to hold you up.
No, that's fine. Yeah. So we're going to talk about property condition next, right? So always ask for the seller's disclosure. If they have not provided the seller's disclosure, or if it's not online, when you check your transaction desk, then click on this. You can add 3 days, you can add 5 days, whatever. 3 days is customary. I use 3 days. That way we don't hold up too much in getting that seller's disclosure. Here's what I want you to remember. If seller delivers notice, even if and when the seller delivers the notice, buyer may still terminate this contract for any reason within 7 days after the buyer receives the notice or prior to the closing, whichever is first. All right, so remember what we talked about, the ways of getting out of a contract. Obviously, you just need to know this. Whether you need it today, tomorrow, 5 years down the road, 10 years down the road. All right, so it's there, and just make sure you know that. Now, what most listing agents do today is that survey and the seller's disclosure is already on the MLS. And in that case, you're going to mark number 1, buyer has received a notice. And even then, as soon as the executed contract date applies, you still have the 7 days. Okay, so remember that. The acceptance of property condition, the standard one is property buyer accepts the property as is. However, if on the listing agreement, not the listing agreement, if on the MLS, the seller had said that seller will replace the carpet, or actually, let's go with this. Seller will replace 14 windows. Let's say that have lost their thermal seal, okay? In other words, if on the MLS, when you look at the private remarks, and on the private remarks, the listing agent has already said in the private remarks that the seller will replace 14 of the, what we call fogged windows, right? So then what I did here is I just put that in here. As long as you get a full price offer, an executed offer, the seller is willing to do that. This just means that they're going to do this prior to any other negotiations related to the inspection or the repairs. All right, so just something to remember. And keep in mind, I'm going a little faster now because we got a lot to cover. All right.
Ketan, now I found it. Go to 6A. 6A.
6A.
Up.
Okay.
6A. Right, title policy. Yeah, so there are these 2 boxes, will not be amended or deleted from the policy and will be amended to read the shortage in area. So I need a little more clarity on this actually.
So yeah, so Raj, we just talked about that, right? So this is where.
Oh, did we? Sorry, I got a phone call in there. I'll talk to you later.
No worries. All right, so
I'm
no
sorry.
Worries. Yeah, no worries. So this is, and I'll really go through it. So if you get through the recording, I'm going to make sure I put that recording in today. But so what this is it was a lengthy discussion. So just, I guess, an hour into the video, just go through it and kind of just go through what we talked about on this, because it is.
Sure. You can go ahead. No worries. No issues.
All right.
Yeah.
No worries. Yeah. It's a pretty long explanation. So, okay. All right. So we talked about the property condition. We talked about the buyer accepts the property. That is going to be your standard. Okay. Unless on the MLS or unless the listing agent had already indicated that seller will replace windows, seller will replace carpet, seller will replace dishwasher, whatever it is that they had already pre-agreed to prior to the contract. Residential service contract is another word for, anybody know? Anybody want to tell me? What's a residential service contract?
Warranty.
Home warranty. Bingo. Yep,
Yeah.
That is it. It's just a home warranty. And all this means is that the seller will pay up to $600 of whatever home warranty your buyer decides to purchase, right? The obligation is on the buyer to purchase it. The credited amount is $600. Keep in mind, the reason there has to be a set amount is because the buyer may come back in and say, you know what, I want a home warranty for my sprinkler system, my garage door opener, my washer, dryer, refrigerator, and these are optional coverages, right? My pool, my whatever, right? And all of a sudden that home warranty cost goes from $575 to $975, right? And so the reason you have a set price in here is because it predetermines what a seller is willing to pay for. Rule of thumb, I still use 600. which still covers most of the standard home warranty policies. Here's the other thing is if you have a pool or if there's any additional coverages that you think the buyer may need, then bump it up to $800. And that's what I've been doing. Now, keep in mind, in a seller's market, you may negotiate this down to a 0. Okay. So just know what makes sense at the time you write the contract. Okay. All right. This used to be on page 4, section 4. I mean, sorry, page 1, section 4 on the old contracts prior to April 1st, or I think it's April 1st. Yep, something like that. They've moved it over to section 8 of the contract now. And very important, if you are representing yourself on a contract and you own at a minimum of 10% of the entity, whether it's an LLC, corporation, or whatever, or if you're buying it as an individual with 5 other partners, you own 20%, you have to disclose your license information. Okay, so just remember that it is critical that you do this. Okay, so you cannot conveniently forget that you are a licensee. Let's put it that way. All right, regardless. So whether it's a contract that you're working with another realtor, or it's a contract that you're working that's off-market listing, make sure you disclose your relationship as a licensee, a real estate licensee. All right. Hopefully that's not there's no questions on that. That's pretty straightforward. All right. Closing date. Give me an example of what on a financing deal, what should be the closing date? Just anybody, just throw it out there.
4 weeks.
4 weeks. What else? 4 weeks is probably the minimum today. Does that, unless here's that's good, 4 weeks.
45 days, right? 45 days or more, right?
And actually, that's perfect. Yeah. So between and actually, you both you guys hit it right on the mark. 28 days to 45 days. 28 days if you have gone through the process of writing 5 offers, and in the meantime, your buyer has already decided on a lender. The lender has already pretty much said, hey, you know what? I've already checked your financing. I've checked your credit scores. I've checked your income and assets. I've checked your, everything that I needed to check as part of that credit approval. And all I need now is a property to work on as the lender. And we can order the appraisal within a week after you get through your option period, right? So at that point, yeah, absolutely, 28 days, as long as the appraiser can do his thing and get the appraisal back to you in 10 to 14 days. Then the additional 14 days will cover whatever additional underwriting requirements the lender has. Alternatively, standard has been about 30 days. So 30 to 35 days is typical, or what we call average. And then, of course, 45 days on the back end if your buyer may have some complications or they have not chosen a lender and so forth. A couple of important things here is, as licensees, as realtors, we have to make sure and stress that your buyers move quickly on choosing a lender. All right, on new construction, keep in mind, builders are, it's on the contract. Builders tell you within 5 days, you have to apply for financing. Use that same premise and make sure your buyers within 3 days applies for financing. Okay, don't let them dilly daddle or procrastinate. And because buyers want to, they want to go and pick a lender that they're comfortable with, which is perfectly okay. But they're negotiating on these prices, and then next thing you know, you've gone a whole week without the buyer choosing a lender, and now you've lost 7 days. And especially if your financing period is over in 12, you're in trouble. Does that make sense? So just remember that it's extremely important to know. All right.
Quick question on that one. When you said credit approval, are you referring it as pre-approval or no?
Yeah, pre-approval.
Okay. Okay.
Yeah.
Thanks.
And you can, and most of so the pre-approval is basically the fact that the lender has already pulled the credit, hopefully pulled the credit. They've already looked at the income statements, and they've also looked at the bank statements. Okay, and that's kind of, so they know that the money is there, and then they got a 700 credit score or whatever it is, right? So
understood. Right. Thank you.
Yep. Possession is one of two. Either as if it's a vacant home, it's going to be upon closing and funding. However, if it's not a vacant home, and a lot of times on the MLS, the listing agent had already said seller needs a lease back for 14 days, for 30 days, for 45 days. The maximum you can do technically is 60 days, okay? I'm gonna open it up again. Does anybody know what stipulation only allows for 60 days? Does anybody know that? And number two, why is it that way? I'm gonna open it up, and maybe a tough question.
Is it seller disclosure form? Is it temporary? Is that you're talking about? Or
So, yeah, so you can do longer if it's a cash transaction. However, if it's a loan transaction, the lender only allows up to 60 days, because otherwise what happens? What do you think happens at that point? If it's beyond 60 days, what kind of a loan is he getting?
It's primary home.
Yep. So if it's a primary home, 60 days is the max. Otherwise, the lender automatically thinks it's an investment property. And I believe, if I'm not mistaken, the deed also has it that way. So just remember that when you have, whether you're representing a seller or you're representing a buyer, just make sure they're aware that the most they can really do a lease back for is 60 days. The only difference to this, and this is very important to know, is when your buyer is buying an investment property and click, there's a residential lease that's already in place. Okay. The reason is because that residential lease, where the tenants are still in the property, and that lease doesn't expire until, December 31st, 2021, and you are closing on May 31st, 2020. That means that for the next 7 months, the residential lease will supersede the sale. And that applies if your clients are buying an investment property. Perfectly okay to do that. All right, so just something to remember as far as the temporary lease back form. Okay. The weird thing is, and I don't know if TREC has changed this or not, the temporary lease back can be used up to 90 days. So I'm not sure why the discrepancy is there, where lenders are only allowing 60, as opposed to where TREC allows for, I think TREC allows for 90 days. So just something.
Is it exact 90 days or less than 90 days? Because I wrote a
less than
contract.
90 days, up to 90 days. Yeah.
Okay, because I was told to write 89 days actually, not 90 days.
Yeah, so 89 days, 90 days. But so the interesting thing is, I think in the future, that's just got to be consistent with what the lender requires and what the deeds require, which is 60 days. But yeah, so you can use the temporary lease back. Now, here's the other thing is, if it's a cash transaction, it doesn't matter, right? Because on a cash transaction, you don't have a lender to report to at the end of the day, right? So if your buyer is a investor and he's buying a transaction and the seller needs a 1-year lease back, hey, makes perfect sense to do it. So just remember those two differentials there. Special provisions, you believe it or not, our old special provisions on here had a seller to have the home professionally cleaned and the home and carpets professionally cleaned. That used to be my special provisions. Now, because of the way the seller's market is, guess what? I don't have anything in here. So, and most important to this is only factual statements. Do not get into writing something that's complicated, and do not get into writing something that could be the practice of law. All right, so just very, very important to remember those two things. Settlement statement. This basically, so let's kind of give you an example. So if I have a $5,000 in here, what is my net to my buyers if the sales price is $750? Anybody want to blurt it out? What is my net to the buyers? I mean, sorry, net to the sellers in this case. What are we really offering as a buyer and a buyer's agent? What am I really offering by saying, I'll give you $750 of the sales price, but I also want $5,000 towards closing costs?
Sales rebate, or is it rebate we're talking about?
No, not rebate. It's settlement and other expenses, right? So what this is the portion of the buyer's closing costs.
Yeah,
that
got it.
would normally
Prorated
be-
taxes.
Yeah, prorations, closing costs, origination fee, loan costs, appraisal costs, whatever, right? But what we're saying here is that I want the sellers to pay $5,000 of the buyer's closing costs, okay? So now, if that $5,000 is a deduction in the seller's net proceeds, what is the actual sales price technically?
Minus 5,000, right?
You gotta add $5,000.
No, subtract $5,000. So it's 745.
Oh, I see what you mean. Okay, yes.
Okay. Yeah. So here's the reason I want you guys to know this. When you're working with sellers, okay, and you get an offer that has 750 on here and 5,000 on here, make sure your sellers know that that's not a 750 offer. It's a 745 offer. Okay. Very important for you guys to look and basically take a look at this section 12 and make sure, hey, do I have anything else I need to pay for? That's basically what that is. Or do we have anything else that the seller is paying for? And that's what that is. All right. So typically it is going to be 0. But if you have an FHA contract, you might have 3% of it. And 3% of a $300,000 deal is $9,000. And that $9,000 you may not realize is coming out of the seller's net gain. Okay. So when you are representing sellers, the last thing you will need is the fact that you forgot to look at the settlement and other expenses and did not realize that, oh, by the way, the buyer's agent and the buyers are asking for $9,000 that the seller is going to pay for, because that's $9,000 less, okay, or $5,000 less. And it's not that buyer's agent starts trying to sneak something in. It's, if you have a certain position of where, the buyers may only have 5% of the down payment and maybe 10,000 in a balance, that they can use towards closing costs. At that point, they may need $5,000 additional, right? So, but you guys need to be aware of that.
I'm not trying to drag this, Ketan, but have you seen this come across lately in the contracts where buyers try to add that in this market? No, right? Okay.
No, I mean, yeah, not very often. It used to happen more often 5, 10, 15 years ago. Very common at that time. Not as much anymore. But I did see one just recently on one of my other on one of my other contracts. It was a 275, and they were asking for $3,000. So the net was 272. So I had to explain to my sellers that, hey, by the way, there's a $3,000 deduction here that you need to be aware of.
Thanks.
Yep, no worries, no worries. All right, we're not going to go into prorations. Just read through prorations, casualty loss. Make sure you read through paragraph 15, default. All right, mediation, attorney's fees, and escrows. These are all customary contractual information that you guys kind of need to be aware of. Okay, casualty losses related to insurance, fire, hail, things like that, and then the delays that may be associated with it. Default is very important as far as contractual obligations on both buyer and seller. Okay, mediation, that just means that the buyer and seller agree to mediate or go to arbitration rather than going and suing each other. Okay, attorney's fees, each representative is going to have their own attorney's fees, and that's how they're going to pay for that. Escrows is really the best way to explain escrows is title company. All right, so just remember that is the escrow portion of it. Federal tax requirements, meaning that this is related to that FIRPTA. Are you guys familiar with the tax rules as far as foreign investors? So just if you're representing a buyer, be familiar with it, especially if the seller is a foreign person. That is, you can have a investor from another country, right, or an institution from another country that's purchased the property by cash. And so if they're not if they're considered a foreign person based on federal tax requirements, there is a tax withholding that you have to be, they have to be aware of. You have to be aware of, right? I think it's 15% or up to 25%. I don't know the exact numbers, but just be familiar with this. If you get into this, we can discuss it further. One thing I want to make sure on 21, section 21, make sure and fill this out according to your buyer's information, buyer name, buyer phone number, and especially buyer email address. Here's the reason why, because if you are on vacation in Mexico and you don't have internet access, right? So you get where I'm going with this. And now all of a sudden the title company is trying to get a hold of the seller because they need the lender to revise their documents or whatever, right? At that point, if the title company doesn't have a way to get a hold of them, they're going to try to get a hold of you. And if they can't get a hold of you, can it potentially delay the closing? Yes. Can it be a time critical event? Yes. All right. So make sure that the buyer's information is in here. The same thing goes for the seller's information. If you're representing a seller, make sure, and if you have a Adobe PDF writer, you can actually add all of this stuff in there, or you can always ask the buyers to, hey, please add my seller's information. Here's their phone number. Here's their email address. All right. There's nothing private about it. At this point, the title company really needs it in order to communicate with your clients. All right. That's the important piece there. Agreement of parties. Just make sure to fill out the right information. At a minimum, third-party financing, addendum concerning the right to terminate, let's see, addendum for HOAs, and seller's temporary lease back. Those are the standard ones. I'm going to go ahead and save this. Those are the standard ones out there. So just remember, depending on which ones you have. Now, if you're doing a relocation, then this is going to be Cardus relocation addendum or whatever company they're using. All right. So just remember that. So if there is, you're going to fill this portion out. Or if it's a non-realty items addendum, the non-realty items addendum is for washer, dryer, refrigerator if the sellers are leaving it behind. Okay. Non-realty items, as we call it. Sorry. Non-realty addendum. I think that's what it is. I'm trying to remember right now, but I'm running a blank. All right, so just a couple of things to remember there. Now, going into this information right here, whoever the last person to sign the contract will fill this information out. So when you bring this contract over to your buyers, ultimately the sellers will sign. Hopefully the listing agent will fill in the executed contract date. That's when the clock starts, okay? So now Reconnection, all of this information here, it's already filled out. Here you can go back in and pull in, again, it's ReKonnection because it's the office, right? So make sure to fill, and this is, if you're representing the buyer, it is an extreme courtesy to the sellers and the listing agent that you fill in their information. All right, so don't forget to do that. If you're using that Mls Connect, you should be able to just pull it up just like I'm doing right now. It's actually already pre-populated. So the only thing that's not populated through Mls Connect is the license number, but everything else, the email address, it should show up my email address here in a minute. It does. You see how I just scrolled up and pulled the details up? That's how it does it. The broker address from MLS. So in this case, it's already there, right? And then the phone number. Let's see what the phone number shows up. I think it's, yep, it's our office number, broker city. I'm going to fill it in here, and zip code is 75080. So I scroll up and it's good to go. And then most important, of course, is your commission. Just make sure that whatever is on the MLS here is what you put in here. All right. We've gone through this in super detail and spent a lot of time on it. I'm going to save this. I'm going to go into that third-party financing addendum just real quickly to show you guys that. All right, so I'm going to show you what we talked about earlier. So now the loan amount is, we changed it to 550. So let's go ahead and change that. Okay, 30 years if it's a 30-year, 15 years. And remember, you want to make sure that the loan terms are consistent with what the lender has already discussed with your buyer. So in other words, here you can, this is just basically not necessarily a cap, but what I do is, for whatever reason, let's say the market tanks and all of a sudden the interest rates are now, 4% or 5%. So this right here at 3.5, that just says, hey, want to make sure that the interest rates are not beyond a certain percentage point. This is important, maybe not necessarily with a lot of our clients, but if you have what we call a subprime mortgage, where And those are very non-existent almost nowadays. But let's say a potential buyer has enough income and they have enough assets to qualify, but their credit score is below the 700 mark or below the 600 mark, hypothetically. But the lender's like, you know what, I'll give you the loan. I don't have a problem with that, but your interest rate's going to be 6%. So this portion right here just basically protects your buyers from the financing portion, where it says, hey, you know what, I'm not obligated to buy this house if the interest rates are a certain percentage higher or so forth. And that's basically what that is. All right. Let's see here. The second part, this is what we were talking about earlier. Buyer approval. Okay. This is that financing portion we talked about. All right. Now it's 14 days, 12 days, whatever works. And then the second part of it is the property approval, which is automatically there. All right. So when you guys get a chance, please read through this paragraph so you understand what this means. So if you don't have the appraisal waiver addendum, the notice of lender's appraisal right to terminate, in that case, then this falls in place if the appraisal is less than the market, than the sales price or contract price of the contract. All right. So just a couple of things there that you want to remember. The appraisal addendum, let's go over that real quick. Okay. And one of the reasons I'm spending so much time on the contract is because it's important to understand these contracts, right? All right. So this is number one, just basically says it's a full waiver, meaning that, let's give it an example. We have 750,000 on this contract. Okay. Let's say the house only appraises at 700,000. That means that the buyer is going to come back with cash or whatever assets they have of the difference, which is the $50,000, along with their $200,000 in financing. So now they're going to have to bring $250,000 to closing. Partial waiver, that just basically says that, you know what, I will pay the difference of anything that is below 725. Okay. So in other words, as long as the house appraises at 725 or more, we're good to go. If it appraises at 700,000 in this case, then the buyer is only obligated. Actually, I take it back. If the price is less than 725, they're not obligated to buy it. However, if it appraises for 726, the difference between the 750 and the 726, which is $24,000, the buyer is going to bring the additional 24,000 along with his 200,000 to the closing table. All right. This right here, additional right to terminate. What that means is we have X number of days after the effective date. That means you are making sure the appraisal is received and reviewed within 14 days. And the appraisal has to be at least 725 or more, or you're not obligated to purchase the home. All right. The most typical one, of course, is going to be the waiver. The full waiver is what today's market is looking at a lot. Customary, not obligatory, but customary. And of course, the partial waiver. All right. So those are the two that are typical in today's market. Now, real quickly, once you have filled out all of this information, the way you're going to do this is you're going to click on the contract forms that you need. Okay. I'm going to show you how I do it. All right, so got all 6 of them in here. You see where it says save as PDF. I click on that. I will save it to my device and as separate PDF files. I will click on save. Okay, I will download. It's good to go. Okay, and then what I'm going to do here, I'll show you. I'm going to save it into my contracts folder. I rename all of it into a new folder, and I'm going to call this one, let's call this one training sample. Hang on. Okay, so normally if you notice, I use the address for my contracts, and then I will just save it in here. Now what I do, okay, so I want you guys to follow this a little bit more. Let me go back into my contract offer email, and you guys have seen this, or you may be familiar when we went over this in the real estate marketing bootcamp. and I will go in here and hang on one second. This is not it. Let me look at one where I actually have the email sent out to the clients, and this is where you're going to send out the email to the clients saying, hey, you know, I'm sending you an offer. This is the offer that I'm sending you. Let me see if I can find one. Give me 1 second, guys. Let's see. And a lot of this has been sent out in an email in the past. So let's see. Let me see if it's called contract offer package. Am I boring you guys yet?
No. Very informative. While you're talking, right, I've been realizing that there are some cosmetic mistakes I've been doing while writing a contract,
Okay,
which can
good.
be improvised, you know.
Yeah, no, that's good. That's good. So,
Yeah.
no, that's excellent. So this email right here, the one you're seeing there's actually a standard template called contract offer package email. And all you got to do is just what I have highlighted, you can go in and just fix it up. All right. But if you notice, it's got a little bit of a paragraph on what to expect on the contract. So make sure you read through this before you send it out. So you're actually aligning whatever contract terms you have with this email template. And then of course, today's market recap really kind of goes over what the buyers are expecting in today's, what the sellers are expecting in today's market. All right. So you notice all 6 contract documents are in here. So I just sent it as a PDF. And once they review it, I also let them know that, hey, once you've reviewed it, I text them and say, hey, I just sent you an email. Take a look at that. Once you're done, text me and I will send you the contract by e-sign. All right. And that's where you're going to go in here and you're going to use your e-sign template. Now, if you are on DocuSign, it's automatically going to trigger your DocuSign version. If you're on ZipLogix, you're going to use the ZipLogix process. Click on new. You're going to click on the documents you want to send. Okay. I'm just going to add 3 of them right now. And then you're going to click on next. You're going to click on the information as far as the buyers, the sellers, and all that stuff. Make sure you have the email addresses. So you're going to have all of that stuff populated. And then you're going to click on next. It's going to open up the DocuSign. And then you're just going to go in and make sure the initials are populated where they belong. All right. I wanted to go through this because I know we got a few more things to cover. All right. So that is your quick version of zip forms, or not even quick. This was a pretty detailed version of quick form zip forms.
Ketan, quick question actually.
Go ahead.
You create a document package, right? You select the documents and you go to zip forms, right? The DocuSign, and to write where the initials will be, and then you realize that there is something wrong you have done. When you come back to zip forms to make that change, do you have to create a new package and send it? Because each time there is a mistake I find, I have to go back and redo the most of the stuff actually.
Yeah, I don't know if there's a way to correct. You can correct it in DocuSign, of course. There might be a way. If it's an email address and things like that, it's an easy fix. You can correct it on DocuSign. Okay, so in other words, if you made a mistake on the email address, the DocuSign portion will not be delivered. And that same thing applies for ZipLogix. So you just go in and correct that. However, as far as what you're saying, Raj, I don't know if there is a way to correct the original package without going in and creating a new package altogether.
And that applies for both, Ketan, for DocuSign and the ZipLogix?
As far as which portion?
Let's say you put the earnest money incorrect in the form. Let's say, 5 instead 1,000, you put, $1,500. So
yeah. I would definitely go in and fix that through the system, through zip forms, and then send them a new package anyway. Okay.
I got you.
Yeah. That you have. I think you have to. There's not another way of doing it. The other thing I want to show you guys real quick, and I forgot, is your help center. Okay. Use it regularly if you run into issues. The Learning Center is excellent. They got tutorials, they got videos, transaction management. Let's see, where's the videos? There we go. Here's your videos, okay? Just to kind of get you started. So they're all there for you guys to use. I'm a big believer in, the more you learn, the better you're going to get, right? There's also a knowledge base. So I want you guys to kind of get in there and look through there if there's any questions and stuff like that. There's a lot to take into on zip forms. And hopefully, ultimately, the more you engage the learning center, the better you're going to get at it. Okay. There's also, I think they have live training still. It's a schedule. It's a calendar, I believe. Let's see what that is now. Yeah, I think it may be a calendar based system. So just, go through it and just see what makes sense. I use the video portion quite a bit, all right, and then the help guides. But I use the video helpful videos is probably one of the best ways to start. All right, so I just wanted to kind of share that with you guys so you have that information as well. Templates you're going to create as you become more and more familiar with writing contracts and everything. You're going to start creating your own templates, just like the same templates we have in our agent resources, right? These are the ones I just showed you guys here. All right, so these are the same templates. Ultimately, if you wanted to get good practice, just take these and create your own templates for now. That would be a good way of doing it.
Ketan, one question, two questions is, one for the group is, does anybody have preference over ZipLogix, eSign, or using DocuSign? Is one better over the other, or it's pretty much the same?
I'll wait for somebody else to answer and then I'll give you my version.
Okay.
What was the question? Can you repeat?
I'm just saying, do you use ZipLogix, the eSign feature, or do you use DocuSign? And I'm asking more as a question, if you have one or the other, is there a reason why you picked that? And
So basically, right, to answer your question, say you create a document package, right? Now, zip forms and DocuSign is very well integrated to automate the process of where to put those initials and everything, right? So when you go from zip forms to DocuSign, that is already pre-populated. Only few places, like just imagine you are putting seller's disclosure in the packet, right? Only in that case, you need to put additional initials and signature. Otherwise, most of it is very well done, in the process. Otherwise, if you go to DocuSign directly, what will happen is you'll have to, in each place, you have to put initials, you have to put signatures, time, whatever, right? It becomes an extra layer of effort there.
And that's, Rajendra hit it perfectly. So the other thing I was going to add to that real quickly is DocuSign is a little bit more of a robust system. So it's integrated very, very well with ZipLogix, or zip forms, I should say. ZipLogix, or the signing system that we have on zip forms, is great when you're starting off. And here's the only reason why. DocuSign is going to cost you about, with us, it's going to cost you about $180 a year. But if you're only doing 1 or 2 transactions in a year, or if you're doing 5 transactions, it doesn't make a lot of sense. Then you might as well just use ZipLogix to do your signatures, e-signatures.
Okay.
When you get into a situation where you're doing 20 transactions a year, or maybe even 10,
Yeah.
Then it might be a better option to use that.
Okay. Thank you.
That's the best way.
Thank you both. All right.
Yep.
I second that. I have used both, and DocuSign is super convenient, app-based, lots of features. But yeah, if you are not doing too many transactions, the cost is not justified, because everything which is essential is also done by the eSign.
Yep. Exactly.
Okay. Thank you.
Yep. Good. Thanks.
And I forgot the second question. So.
All right. When you do, just remember. All right. No worries. All right. So let's go on. I'm going to go ahead and close out the zip forms, and we're going to go into Matrix MLS here in a minute. So let me bring back the presentation. Can you guys see the presentation again?
Yeah.
All right. Let me get it into my duplicate mode. Hold on.
So while you're doing that, I just remember the question. You said, I create my own templates. I'm not sure I follow that 100%.
Sure. So when you get into my sample contract forms, okay, those are all templates that I've created. Templates in the sense that when you use a contract over and over again, you don't want to have to, write in every little detail.
Okay, so let's say if you have like a $750, is something that is standard and repetitive. That's what you. Okay, sorry. I thought when you said
That's
create
exactly
my
right.
own
Standard-
templates, I was thinking like forms. Have you changed something? Okay,
yeah.
so I'm good. Thank you.
Standard, and that's actually very good. Standard and repetitive is perfect. In other words, let's say, for example, I have, but on my templates, I have buyer name, seller name, and all that stuff, right? The legal description is going to come back from the MLS Connect. So what I did was, like, on my standard template that I have for the buyers, I've done like 200,000 on 100,000 on the down payment, 400,000 on the sales price. But let's say I have a $600,000 house. I know it's going to be 150,000 and 450. So I'm going to change that.
I got
Title
you.
company is the same. Home warranty is a good one, $600. So that, and your information on page 10, as a buyer's agent, the only thing you have to add is the seller's agent listing.
Now makes sense. Thank you, Kate.
Yep, no worries. All right, let's go back in here. We talked about this. This one is, so Dropbox and Back Agent. I'm going to do a quick intro to Back Agent. Everybody should have access to Back Agent now. And with Back Agent, what I'm going to show you guys is just the tutorials, because the most important thing here is I want you guys to be familiar with using Back Agent on your own, okay? When you go into Back Agent, this is what you're going to see, all right? Yard signs and Supra box guide. This is what Rachel has prepared as far as our Back Agent and the ability to rent yard signs and Supra boxes. All right, so you're going to go into this particular document. I believe this is the document, or this might be the this is the form that you're going to fill out. I think no, this is the document. All right, so if you ever need a Supra box, or if you need a rental from us, this document will go over all of that stuff. Okay, I'm not going to read it. I am going to expect you guys to kind of just read through it and understand exactly what we have in here. There is a lot of information, so you are going to have to kind of go through that. We don't have the exchange program anymore. That was when we first started off. But if you're going to buy signs, you can use this to order new signs. All right. And then ultimately, this is the page that's associated with purchasing new signs. So you can take this to any sign vendor, and they should be able to kind of, it's going to be some work on your end as far as navigating through the process. But here's the thing, Rachel's done a fantastic job on giving you guys the necessary information to do this the right way. All right. So just go through this if you are looking for renting a yard sign or Supra box. What happened to my Supra box? Was it in here somewhere? And the same thing goes for the Supra boxes. I think it's one of the other pages down the road. Okay, I got to go back and look at this.
I think you had it there.
Oh, I did. Okay. Okay. So I trust you. So yeah. So that's what that is for the rentals. Here's your if I see this all the time. Okay, can I get the W9 for ReKonnection? Honestly, it's right here. All right, so this is the one for Reconnection. So all you got to do is just download it. Pretty straightforward. Where did it go? All right, and the IABS, and then this is the other. Yeah, actually, both of these are for the Reconnection. The Back Agent how-to guide. Okay. We spent a lot of time preparing this. So when you get a chance and you have anything that this is, I think it'll take you less than 30 minutes, I believe, to go through this. Yeah, Rachel's created this as a video, if I'm not mistaken. Oh, no, sorry, as a document. So just how to submit transactions on Back Agent. Pretty straightforward here. Just follow this. There's actually a training video on Back Agent system overview, how to add transactions. I'm going to go over this in a minute as well. The reason I'm kind of going through this with you guys is because I want you guys to have the necessary tools and the resources. Ultimately, it's on you guys to kind of follow through on this stuff, right? That's the important piece. With contracts, I wanted to make sure you guys understood it. So we spent a lot more time on that. But all of this right here, if you notice, is right in the front as soon as you log in. All right, so we talked about yard signs, Supra boxes, Reconnection, Back Agent, ordering business cards, creating an IABS and adding to your email signature, Those are the main ones. And I know, Prithviraj, you were talking about not seeing this, right? So let's go through this and see what happens.
Oh yeah, the
okay.
first video I clicked and it says location has changed or something.
Oh, okay. All right. So this is the one. Yeah. So this is the one where we've changed the account to ReKonnection. All right. So what I'm going to do is, oh man, I don't even know how to do this. I do, but I don't remember how to do this. Let me see if I can find, give me a second, guys. Let's see if I can find okay. Oh boy, I don't remember which one it is, and I don't think we have. Great. Okay. Let me do this. I'm going to have to kind of go through this and see where we did that last first client communications meeting.
Okay.
I will put this in. Yeah. So one of the things we need to do is we need to move all of these over to our new YouTube channel. All right. And that includes this particular training video that we're doing today. So Prithviraj, I'll go ahead and do that is what I'll do.
Yeah, but yeah, thanks for doing that. We chatted yesterday, so it definitely helped. And one of the questions I had to you was, what would be a recommendation in filling out those contracts? Let's say I finish it. Is there like a process in place already where I can kind of get like like bounce it off of somebody?
Yeah, and I'm glad you brought it up. So I'm going to put it in the chat. Okay, you, especially with your first transactions, you want to make sure to send it over to us at admin@reconnection.com. Okay.
Okay, got it.
Because
let me add one more thing, which is a very unknown feature. Most people don't know, but there is a button when in every contract called collaborate, and you can actually buddy up with someone if you're a new agent and you want to make sure that you're doing everything correct. So one way is to definitely send it to the admin office, to Ketan Bhai and broker. We can do it. But before that, if you want to bounce off and make sure with your buddy up that it is doing, you're correct, you can share with that collaborate button and make sure that you're doing right thing. So you can share with anybody within the brokerage. So that is a good feature. One other thing that I wanted to add, being a new agent, make sure that when you do a buyer's, when you do an offer, always check the transaction desk, because a new trend is people are putting what is required as an offer as a part of a document in a transaction desk. And so many agents, because they are overwhelmed with number of offers, if your offer don't include whatever they have listed in there, they'll right away reject it, not even tell you. So even if you have a good offer, if it's not a complete offer, it doesn't stand a chance, and you don't want to do it for. So make sure you do that.
So are you saying whatever is required as part of the offer, for example, the pre-approval letter, I was reading a couple of them, that's what you're saying, if it does not include that thing? Okay, I got you. Thank you.
Yes. And then there are some who says buyer is looking for this lease back. A seller is looking for this amount of lease back. Seller is looking for title policy paid by buyer. So you make sure that at least whatever they are.
Like the minimum requirements, what they're expecting to see as part of the contract, right?
Yes.
Yeah.
Yep.
Thank you.
Yeah, Alpa, that is spot on. That's perfect. Thank you for sharing that. And that is exactly correct. So yeah, make sure that, and we're gonna get into MLS here in a minute, but yeah, absolutely make sure that when you're submitting an offer that you go through the transaction desk information that's on the contract. All right. So that's a good point. All right, let me go back to where were we? All right. Let me go back to back agent here. All right, so I'll go ahead and move these videos over to the YouTube channel that we have, because I think, yeah, what we did was we started moving it over, and I think Rachel may have shut down the Can-Am Realty Group YouTube channel is probably what it was. The other thing I wanted to show you here, all right, so the links section, okay, is where you will find, so if you, now what we're doing is we're not having anybody go through, before we used to have everybody go through Dropbox. In other words, get an account on Dropbox And then from there, pull up the, the resources that we have, which is the Can-Am Realty Group folder that I showed you guys earlier. So this right here with agent resources, marketing, new agent onboarding, ReKonnection, and all that stuff is now over here in agent resources Dropbox. All right. So you can come in here, and the great thing about this now is all of the information is right there. So it's web-based as opposed to file-based. You don't need to have the Dropbox account anymore. You can just pull up the information that you need. And I'm going to kind of just delve into our Dropbox as we're going through this. The email templates is great to see and review. We've talked about some of those email templates earlier today. Let me see if I can find that contract package or contract offer email template. Let's see, here we go. Is that it? No, that's the showing protocol. Let me go back out. Let's see here. What happened to my contract offer template? Hang on. Let's see if I can find it. Remember that email that I showed you guys earlier with the contract? Here's the same thing. It's very similar. You guys can use this details, or you can also use the contract email that I showed you guys earlier. I'm going to go ahead and after this class, I'm going to modify this a little bit more to make it neutral, and then I'm going to send it out again. I think I may have already sent one out maybe about a month ago, maybe 2 months ago. So I'll just forward that. I believe I thought I had one. So I'll double check and make sure I forwarded that standard one that I used in the past. I know we have a new one out here in the Dropbox. So I just got to go look for it and see where it is. Let me see. Unless I put it somewhere else. Let me see if I can find it somewhere else. And I won't spend too much time on this. The most important thing here is what I wanted to make sure is if you guys get a chance, go through, like, for example, we have a commission rebate letter. We have contract write-up. We have a COVID-19 addendum. There's a lot of these documents that I've created over the years. And then, Rachel's tagged on and added more of these documents as well. The reason is because I was writing the same emails over and over and over again, right? So the idea was, okay, let's go ahead and simplify things. So I started doing that for myself years ago. So then all I had to do was just, every time I wrote a contract offer, I knew what to write to the listing agent. Every time I wrote a contract offer where I wanted to send the email to the buyers, I knew exactly what to write and so forth. So that's kind of how this has evolved. It is a lot of material in this as far as the email templates goes. So, and it would take you probably days to kind of just go over a lot of this stuff. So if you're comfortable with that, you can just go in and just read through these as we go, or as you go, basically, is what it is. So this is the email template section. There's also a guides and how-tos. So you can kind of go over that as well. And we have, a lot, it's a wealth of information that you can use. Title 101, it's a great document to understand title policies and so forth. Steps to a listing a property. And we've also sent out a document that's standard related to that as well. So, again, just a lot of resources out there. The goal is for you guys to kind of just go through this and see what's available and use these to your best abilities more than anything else. All right. So that's the links section that we're talking about. Go into links and it will allow you to pull up all of these quick resources, sample contracts, steps to a listing, buyer and seller communication templates. So a lot of stuff here that I want you guys to use. The second portion of this is the Learn tab. Okay. The Learning tab on here is going to be your back agent overview, is where you're going to go. And here, what you're going to do is, let's see, where do the videos go? Hang on. Back agent, hang on. Let me go back to it. Let me go back to the Learn tab. Yeah. Okay, so this is the only one that's there now. There used to be other videos out there. So yeah, the back agent overview is a great video that you can use to kind of just get an understanding of how back agent works. All right, and again, it's on you guys to kind of just go through this document. I mean, to go through this material to understand it better, more than anything else. Trying to think if his back agent recaps is, no, it's still just, it's another, yeah, back agent back office overview. Okay, I guess they've taken out some of the other videos that they used to have on here and just kept that one video now, is what it looks like. Let me see one more thing. Yeah, so that's it. So they've changed some things where it's just the back agent overview video that's out there now. When you're creating a transaction, this is where you're going to start. You're going to create add transaction, go in and decide which one it's going to be. And then from there, you're going to follow the instructions on the back agent guide that we showed you guys earlier. All right. So let me go back in here real quick, show you guys where that is. Let's see here. Yep. And it's going to be the back agent how-to guide. All right. It's a quick version of training on back agent. We did a quick version of the resources on Dropbox. The last thing I wanted to show you guys is the, let me get in here real quick. The back agent we went over, the MLS. All right. So two things I want to show you on MLS. If you're representing buyers, you have to be familiar with how to pull up a CMA. All right. And that's kind of what we're going to do. Does anybody have a particular preference? Let me see who we have on. Raj or Dev or Srinivas, do you have a particular preference of a particular house you want me to run a CMA on? Or do you have anyone that you guys are working with where I can do an next
I'll give one
example?
for, I can do for lease works, or you want only residential?
I can do a residential one. Do you have one in ABOR?
Yeah, I have it. 1 second.
Yeah.
I'm giving you.
Sorry, Raj. Yeah, I'm gonna log into my ABOR.
I kept in the chat.
Yep. Okay. Hang on 1 second. I don't know what my password is. So hang on 1 second. I'm going to unshare real quick. I need to go back and look at my. Okay, give me 1 second here. Okay. Oh, it's already there. All right, so now I'm in the MLS. So which one are we doing? We're doing 8800 Sykes Way. Okay. All right, so I'm going to click on my matrix MLS. And Raj, this is the same way you would run the one for Netris, for North Texas. Okay. So very similar, because both ABOR and Netris are using Matrix MLS as their portal. So the way it's done on the Austin MLS is the exact same way we're going to do it on the North Texas or Netris MLS. Let's see, what is that address again? 8800 Sykes Way. Okay, so the first thing I'm going to do is I'm going to go ahead and pull up the address. All right, that's what I'm doing right here. All right, so you notice you have the address. Let's see here. and you got two MLS listing IDs. I'm going to go ahead and click on both of them. Give me a second here. And let's see, the one that we're talking about is, let's see here, is the one that's listed for $499.9, correct? Devender?
That's correct. Yeah.
Yeah, it shows as closed, so it's under, so it's been.
Recently
it's
they
already been
closed.
closed.
Yeah, they're closed and they're leasing it, I think.
Okay, all right, so we're looking for, all right, so now let's see here. They, it was list price for $499.9. How much did it end up selling for? Curious. $557. Okay. Oh, Swarna sold it just recently. Okay, all right, so let's go ahead and 557. So now what I'm gonna do is I'm gonna go ahead and use this detail. I'm gonna start with the subdivision, all right? So there's two ways of running an ML, to run a CMA. This neighborhood is Goodnight Ranch is what I'm going to use. So I know what the subdivision is. It's Goodnight Ranch. We know what the square footage is, 2,672. And we know it's built in 2018. All right. So that's all I need to run my CMA. It was listed for $187 a square foot, sold for $208 a square foot. All right. So Goodnight Ranch, 2,600 square feet, 2018. So now I'm going to go in here, click on residential. All right, the way to do this is you're going to start with the subdivision information, which is right here. So now I'm going to go in and call Goodnight. And the asterisks, if you notice, the asterisks that I used are basically wildcards. All right, so and when you're pulling the information up, you can use the wildcards to pull the details. Pending, closed. And pending just means, you know, that the house is under contract. I mean, is under contract. Active under contract is basically active option. So I'm going to use these three as my criteria. And if you notice down here, it's 23 matches. Okay, which is a lot more than kind of what I wanted. So now what I'm going to do is I'm going to refine it a little bit more. We know this was built in 2018. So I'm going to go 2016 to 2021. I really don't want new homes. Let's see what happens. 15 matches. Good. Now, our square footage was 2,600, so I'm going to go 2,400 to 3,300. So you notice what I did. I'm filtering it to get a certain number of homes that I can use as my CMA. I'm pulling my results, and I'm going to go in and do my signal line to just kind of get an idea of where they are. So you notice the other three are closed because the status is C. The one that's active under contract is this particular one right here, the first one on the list. And that one, of course, is 2,700 square feet listed for $549. The other one is 2,600 square feet sold for $300,000. 2,672 square feet. That's the one where we're talking about, sold for $557. 2,500 square feet sold for $575, and 2,500 square feet sold for $595. All right, so I'm going to click on that. I'm going to do a quick CMA in this case, and that's just a spreadsheet that kind of gives me an idea of where the actual value of this property should be. We have a total of 5 listings, and the average is 217. So when Swarna sold this one back in, let's see here, June, I think is what it was. Yeah, or Sykes Way was July 26th. She actually got a pretty good deal because the average is 217 and her folks bought it for 208. All right.
Yeah,
so, you know, if you, so I know I did a really quick version of it, but you see what I just did, right? Pretty much. Okay. Any questions on this? Now, there's another couple of ways of doing this, right? So you have, yeah, go ahead, Devendra.
When you go to a complete comparison, right? What I saw, right? It is showing like, you know, this area they sold this much, the other area. That I was looking other day. I was unable to understand this part. I got it. If you go to complete CPA, right? I want to understand, especially now people are asking, right? They're buying lots or real estate. If you go to complete CPA,
Which one is that?
4th tab, CMA.
Oh, the CMA. Okay.
There I'm getting more details, like, you know.
Yeah. So, and that's a very good point. All right. So I'm going to show you guys, I'm going to go into my, I just did one recently. I mean, I haven't done this in a long time, but I'm going to move over to, it's the exact same way.
Yeah.
I'm I'm going to do it on Netris only because I am so much more familiar with Netris than I am with Actress. This is
Sure.
the exact, so look at this picture, take a screenshot so you know what I'm talking about.
Yeah, yes.
I'm going to shift over to my Netris version. Okay. So now if you notice, this is the same thing, but on Netris. All right. So now what I'm going to do is, let's say I am working with a buyer. I mean, let's say I'm working with the seller. So two things, right? The quick CMA I use specifically for when I'm representing a buyer. All right. So in other words, I'm going to go back and forth between the two. So in the case of a buyer, I will just pull up the quick CMA and give them an idea of, okay, and then I'll just create this as a PDF. All right. Download it or whatever, and send it over to them and say, hey, you're looking at an average of 217, and if you notice, the houses have sold for, 10,000 over, 30,000 over, this one's 80,000 over, this one's 58,000 over, and so forth, right? So you have the basic details for the CMA itself. And this is great to do for your buyers, because having to run a complete CMA for a buyer doesn't make a lot of sense. All right. So I wanted to kind of get that out first.
Okay.
But if you're working with sellers, you want to do a presentation. You want to do a listing presentation, right? So what you're going to do there is, now what I'm doing, let's say, for example, I have a buyer that's got a house with a pool in Richwoods, which is a community here in Frisco. And they want to sell, and they're interested in selling the property, right? So I'm going to click on pool, homes with pool, and I only get 2 matches, not enough to go by. So I'm going to go ahead and just use this. I know it's at least, now the other thing is it's a single story, which in this case, there's only one house that's single story. So that's not going to work either. You notice what I'm trying to get to is at least 5, 6, 7 houses that are within a certain criteria that I can use, right? So now I'm going to go to 3,500 square feet to 4,200 square feet. Hopefully that pulls me something. Perfect. 4 houses. Maybe not enough, but good enough to get started. Okay, so now I'm going to use these 4 as my benchmark, right? Or my selection. I'm going to click on the list by just clicking on all of them. Now I'm going to go ahead and click on CMA. Now, if you don't have a contact name, let's go ahead and just do this for you guys. All right. Give me, let's see, we have Raj and we have Srini and Dev. Okay. Give me y'all's email addresses real quick, and I'm going to put this in and we're going to create this. You can
I
put it in
typed
chat. Yep,
chat.
dk99991@gmail.com. Okay. dk99991@gmail.com. All right. I'm going to use that. If anybody else needs this. Okay. So we'll just use this one. All right. So now that I have this, I'm going to go ahead and save this information. Okay. And then I'm going to go ahead and put down a description for the contact team. Okay. So I'm going to create new contact. Oh, shoot. All right. So, no, this is, I'm sorry, CMA for Richwoods. Okay. So now I'm going to do that. And then I'm going to start going through the next set of pages. These are the selected pages that are already as part of the listing presentation. Market analysis, explanation, summary list, pro. Now, so I'm going to go in here, cover sheet with photo, or you can take that out. All right. So let's delete that one. And I'm going to put in just a regular cover sheet. I'm going to move it up. You see what I'm doing now, right? Is I'm creating now this summary list is basically just a summary of the properties that are associated with the price adjustments. I'm not going to put that in here as well. Comparables, days on a market chart. I'm going to go ahead and add that in there. I'm going to go ahead and put in a CMA brief. All right. These are the static. Basically, these are some of the explanations and stuff like that you can, when you're doing a listing presentation, you can present this. And normally what I would, normally back in the old days, what you would do is you take this whole document, the CMA document that's created, and you would print it out and then send it over to the sellers, right? Or I mean, you take it with you. You'd have in a little nice little folder, and that you can kind of give them a presentation. nowadays, the best way to do this is just send them the CMA presentation and show them here's what we're looking at. And, you can do this separately. You can do it electronically. You can do it on a PDF. And that's basically what we're doing. So I'm going to go ahead and add all of these in here. Not all of these, but as many as I can. Effective overpricing is a really good document to kind of get an understanding of if you overprice a home, what happens. And a lot of these are almost similar in style. Okay, steps to a positive selling. So what I did here now is just put in some additional documents that we can add into it. I'm going to move the CMA map up a little bit. All right.
So Ketan, one more quick question. So one of my buyers, he doesn't want to offer more than the list price. And I keep telling him like Austin is going like 10% more.
Yeah.
I've already like, shown so many homes, how do I convince him? I keep sending him the CMAs too.
No, there's not a way to convince them if they just don't understand it without just providing the facts. Okay. And what I mean by providing facts is anytime you come across an article that says that there's a, especially in the news, you'll hear a lot of things about the Austin market, Dallas market, and so forth. Just share those things with him, and the other way, Srini, is show him or her the CMA that we just did. If you notice on the CMA that we just did, look at the prices. This was listed for $279, sold for $300. This was listed for $499, sold for $557. This was listed for $495, sold for $575. Just take a screenshot of this and send it over to him and say, hey, just want to make sure you understand that, going with list price is just where we're really not getting anywhere, and that's the only way you can explain it to them. Does that make sense? It's really hard to explain to a buyer that may not understand the market. But here you got the details right here. Just share this, create a PDF and send it to them and say, hey, here's this neighborhood that you're looking at. Here's Goodnight Ranch. And if you notice, every single one of these houses went for over list price.
Okay.
Yeah,
thank you.
That's really the only way to do it. All right, so let's go back to this. Let me see if I can still add. All right, so did I get another email address? I think I did, right? Okay, let me go ahead and add yours in here, see if I can add it in here. Let's see here. I won't be able to add it here, Srini, but let me see if I can. I may have Devendra send it to you because I don't know if I'm going to be able to add it anywhere else.
That's fine. Thank you.
Yeah.
All
I
right.
think later you can't add it. I'll send it.
Okay, all right. So I've added a certain number of pages. Subject, property. So I'm just going to pull in the subject information. Type in the subject property information manually. So I'm going to go ahead and just type in. Let's go with 6564. Street number, Simon. Let's go. Let's see, 75034. Okay. So and I'm just now, but you see how I'm doing a little bit more work than I'm normally doing for properties. All right, so now I've just put that in there, cover. Now it says no photo available. We do have a photo. So let's say you have a photo available from one of the past listings or whatever. So you can go ahead and just add that into it. And that's what I just did here. Okay, so you can use one of the previous listings, and this is just really for them anyway. So hang on, why did it not go? Oh, there we go. All right, so I just added a cover. I added the photo. This is for you guys. So I added just the email addresses and all that stuff. Okay, let me think. Then I'm going to pull in the comparables. We already have 4. So I'm going to click on all 4. So we did that. And then the map will show now the comparables and where each one of the properties are. So this is going to be a separate document. I don't do anything with the adjustments. And I won't do anything with, because most of them are all the same, except for the one that we have is, no, actually they're all the same. Total beds, bath, all of that stays is pretty consistent. Now the pricing is where your valuation is, right? So you have this detail as well. You notice for now, I'm just kind of going through the whole thing. And then when you click on finish, this is what happens. Okay, now I'm going to go ahead and just see him. You can email that CMA. So actually, I'm going to click on it here. Perfect. And there's Srini's email. All right. So, and you know what? I'm going to copy myself on this one too. Okay. And let's see. This is team sample CMA for sale. 46564 Simon. And then obviously just an introduction. Hello, here's the CMA for your home at 1234. Let's just go with 6564. Let's go. Let's discuss pricing when we meet up. This allows you to go ahead and create a routine where now you're going to go and take a look at the house and so forth. Okay. So I've sent it over to you guys, and then that's it pretty much. The one thing I'm going to do is, let me see if I can go back in and create a PDF, because I really wanted a PDF of this, and maybe not. Oh, back to summary. All right. So now, yeah, it just went away. All right, shoot. I wanted to create a PDF, but so you're going to get that link for that document here pretty soon. And so really, this is exactly what you would do if you were representing a seller. Does that make sense?
I got that part. If you open that PDF, right, I need the sections, like the list, especially the graph, right? I think you should have got an email, right?
Yeah, I should have gotten an email by now.
Yeah.
Let me see.
The
Now, the
details.
problem is mine is filtered. I do
Okay, no
100 of
issue.
these a day, so
Okay.
I probably will not get that email. Let's put it that way.
Okay.
Give me a second. Let me see if it's in
1
my.
second.
Yeah, you might have gotten it before I do. Let's put it that way.
Yeah, we got it from you.
Yeah, I got it. Here it is. It's in my trash folder.
Okay.
All right, so I'm going to view the CMA. Okay.
Here, I want to understand, especially some areas, right? Can you go quickly, and I'll tell you which this part
Yeah,
we
more
are
please.
good.
Yeah.
Actually,
So this
comparison.
is the, so if
Yes.
you notice all of the filters that we did, I mean, all of the documents that we added and everything, and then I reorganized it. And that's exactly what this is. It's a PDF of that information. All right. So where am I going?
Okay. Come down. This graph, activity wise, what is activity on timing? Weeks on the market. That's fine.
Yeah. Yeah. This is weeks on the market, activity versus timing. Yeah.
Again, go down. Okay, come down. Okay. Come down again. Okay.
Average price per square footage is 176.
Okay.
Yeah. And then you can now create this as a PDF.
Okay. I got it.
And then pricing recommendation.
Yeah, I got. Okay.
Yeah, pricing.
Get it. I got and actually I was selling lots. They were asking comparison. Flogger Valley, this is the area it was selling. This is a high area selling, and next location there different colors, kind of, high selling area a little bit, and Austin. This is where Cedar Park. I got it when I generated CPA maybe.
CMA, yeah.
Yeah, CMA. Okay. I'm good with this part. Thank you. And
You sure?
yeah.
I'm gonna go ahead and say this for myself. Give me, and I believe it or not, I actually, one thing you'll know, I'm very organized, or I try to be extremely organized. So
That's
you
good.
notice I have pretty much everything created as just different things, right? So I'm gonna create this as my CMA. This is a seller CMA. CMA, hang on, CMA for seller, long version for 6564. So that way I have a future. Okay, done.
Okay.
You see what I'm saying? So yeah, and I'll show you guys. I'll share with you guys the way I do things. Not everybody has to do it that way. I'm extremely organized, so you can see that even with my contracts, if you notice, all of my contracts are aligned by address. Okay, so I use addresses to do it, and then obviously I've already done a PDF and saved the PDF, because this is the PDF that I then send to the buyers or the landlord or the sellers or whoever, right? So, and I label each one of my contracts according to the type of contract. All right, you notice property management, lease listing, contract, meaning the resale buyer packet listing, farm and ranch. So, you know, everybody has a different way of doing that. Just whatever you're comfortable with is probably the best way to explain it. The other thing I do is MLS sheets. So what we just did, that was an MLS sheet. But if you notice, I create MLS sheets, not necessarily all the time, but if I need something that I need to then go back and look at, I'll use my my MLS sheets for that. My listing pictures is another one that, if you notice, every one of my contracts where we've done listing pictures for, we will go ahead and I'll put it into a folder. So that stays with me as well. All right. We have a property management folder. I have my own real estate folder for all of my, not just my real estate folder is really just everything that's more personal to my real estate side. And then of course we have our Can-Am Realty Group folder, and our Can-Am Realty Group folder is the one for the team. This is the Dropbox where all of the documents we've kind of gone over recently has been. All right, we're coming up on 1 o'clock. Hopefully, I know this was a lot of information, and hopefully it was good to kind of go through it.
Very good, Ketan. Thank you so much.
Yeah, I would agree as well. Thanks, Ketan, for finding time, and everybody else as well.
Yeah,
Yeah.
a lot of patience, kind of, you know. You're asking.
no worries.
That's
It was
really good part, you know.
Thank
Hey,
you.
Ketan, one quick question is, do you have any guidelines on the referrals? So like, Dallas agent referring, for example, Rachel referred me to somebody to lease.
All right, so I'm going to put this
Yeah.
back on you.
Find
Trini.
it.
I'm going to find you my, hang on one second. We just sent this out. So here's the thing. If you don't have it, let me know.
Oh, I should. Okay.
Yeah, hang on one second. Let me see if all right, here we go. This was back in July 11th. All right.
Okay.
Yep, there you go. Do I need to send it again?
Yeah, I didn't join it then. Do you mind sending it to us, Ketan, or?
Yeah, I can send it to you. Yeah, so you know what, Prithvi Raj, you may not have gotten this one. What's your email address?
Yeah, it's patil.prithvi, so PATIL.
Got it, right?
Yeah, there you go.
And Dev.
DK.
Yep, got it. All right, so I'll send this.
Thank
over to
you.
Yep, take a look. Sorry about that. You're
No, you're fine.
You guys may not have gotten this.
And one more question, I have a general one. So when you listed this house today, right? So suppose, for example, like my one of my clients, he's debating between Austin or, Dallas. So can I sent him the link about the house. So can I be his agent or I have to go through some agent in Dallas?
Sure. So here's what the NAR code of ethics requires. You have to have an understanding of the geographic area, right? It's something recent. Here's the thing: if you're familiar with it and you're comfortable with it, and you're like, for example, we've had. I'll give you a good example. I have one of our realtors in Dallas picked up the MLS. The MLS in Abor because they had a cousin that wanted to buy a house. He's been doing real estate for 15 years, right? So very familiar with how the MLS works, how the Austin market works, and so forth. So for him, it was okay. He's gonna go ahead and share, probably part of the commission, or maybe all of the commission back with his clients, right? So for him, it would make more sense. So really, it's just, I know we've had, like, for me, honestly, it's just easier to just refer it out and collect, like, for example, on mine in-house buyer representation, I just charge $750 for it, because there's might be a little bit of commission rebates that goes on that you might, that the other agent may need to cover. So I do it where it's comfortable for me, and the other agent makes a little bit of money as well. And then here's the other thing is, you're now building a relationship with that other agent, meaning that when the other agent has a transaction that's going to be in Austin, they should refer to you, right? So
Yeah, yeah.
we're trying to build those relationships as we go. So that would be my opinion. Especially if you're new, it would probably be the best way to go.
Right, right.
Does that
Okay.
make sense?
Okay,
All right.
thank you.
And then and you can use this as this is, remember, it's not structured. It's just what I do. All right. So that in no way means you can do the same thing or you have to do the same thing. It's just what I do. Does that make sense?
Okay,
All right. Okay. All right,
Thank you.
guys. All right. We're good.
bye. Thank you
Yeah,
very much.
thanks, Ketan.
No worries. We'll see y'all. Bye-bye.